2 years, during FY27 and FY28. So we can see the overall realization coming in these 2 years itself. Further, this order also has a 15 years of maintenance contract where they'll be providing maintenance to the supplied wagon, while the scope of the order includes supplying over 2,000 plus freight wagons, also 30 locomotives. With this particular order, the company increases the stance in the overall African logistics space, and further we can expect that overall African geography could see more for further orders going ahead. Now, on the other hand, if you look at the FY26 performance, it was on the weaker side. The overall top line saw a downtick of roughly 40%, while the EBITDA saw a downtick of 60% on the back of that low business volume we saw in the previous year. But the fresh start of the year with the new order is something to watch out for. How does this pan out in the Q1 going ahead?
Okay, Jasmeet, thank you so much. But stay on, because NIIT Learning is the other one that is also in focus today, although the stock is taking a knock of around 12.5%. Give us a perspective on what's happened here.
For that. Now, if you look at this particular counter, it has had a weak Q4 and a weak guidance from the management that is linked to the overall downtick. Now, if you look at what the company does, this company provides managed training services to various companies and is spread across 30 odd countries. In terms of stock performance, as rightly said, the stock is down about 24% over last 5 days. And when you look at the over last 6 months, the stock is about 31%. And over last 1 year as well, the stock has suffered down about 34%. In terms of Q4, what did not work for the company is a revenue downtick, which came below the street expectation. And that was on the back when the large clients pulled back their orders in the Q4 because of macro uncertainties, which led to the overall Q4 downtick. If you look at the other key aspect, the company has acquired few entities as well in this particular quarter, but the acquired entities had a low seasonal movement in the Q4, which led to the overall impact on the EBITDA, where it came in at 19%. Further, the overall organic growth has come in at just 7% for something like a company where NIIT Learning, where we said that the overall constant currency movement is coming at a slower pace. Further, the FY27 guidance for the company's guiding is for low single digit in terms of the overall growth going ahead, which has been disappointed. But the EBITDA is something to watch out for, given the company had guided a range of 20 to 21%. It has come in line, but further the commentary of what can happen in the coming time is something that street is worried about, and that's why the stock is down.
Okay, all right. So that's the view coming in on NIIT Learnings. The next one that we have is Suryoday, a small finance bank. Now, this one is in focus and up 2.7%, almost 3% as we speak, off from its day's high point. But we have Shivam joining by to give us more details on this one. Shivam?
Well, yes, this Suryoday Small Finance Bank has been snapped to session losing streak, and it has been gaining since in 10 sessions out of the 12 sessions past. Now the stock has also touched 1 year intraday high in today's session and has been giving a positive move. Now, talking about the recent news on the bank, the RBI has reappointed Krishna Prasad Nair as the non-executive part-time chairman for 3 years, and earlier he was been appointed as an independent director for a period of 5 years in 2021. Now, and subsequently after that, he has been appointed as an independent non-executive part-time chairman for 3 years in 2023, and also has worked with IDBI and this Indian Overseas Bank in past. Now, looking at the recently posted Q4 results, overall the results have been on a positive side, where the NII has seen a growth of around 29%, and that was on the back of strong credit growth. The margins have also seen an improvement due to improved yields on advances, and in terms of profitability, the bank has seen a turnaround, and their profit for the quarter stood at around 50 odd crores versus a loss of 34 crores on a YY basis. And in terms of asset quality also, the bank has seen a slight bit of improvement. On the management commentary side, the overall positive commentary has been given by the management, where they have guided for a 30 to 35% of loan growth. The bank aims to grow the digital deposit by 2 times of the current growth, and will open 100 new branches in FY27.
Okay, Shivam, thank you so much for getting us those details. But viewers, with that, completely out of time on this edition of Small Cap Buzzers. But do stay tuned. Ask Profit comes up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back. You're watching NDTV Profit. This is Ask Profit, the afternoon edition. My name is Puneet Zaveri. Thanks so much for tuning in today. And if you haven't already done it, do start sending in your WhatsApp queries on the WhatsApp number that's flashing on the top of your screen. You can also call us, talk to us, as well as our guest on those stock-related queries as well. The landline number for that is also flashing on the top of your screen. But before we do that and a lot more, let's quickly look at how the markets are doing, because it's been a very interesting day in today's trading session, while we have seen some form of buying coming in the last hour or so, and hence we're now above the 23,500 levels at this point of time. The individual stock movers also give us some perspective as well in terms of what we've seen for the Nifty 50 as well. The other stocks like Cipla are some of the ones which are doing well. Asian Paints, probably on the back of good numbers from Berger, is getting a push as well. Adani Enterprises, BEL and Hindalco is also doing well in trade today. What's not doing well is Power Grid. It's down and the biggest loser for the Nifty 50 today, down almost 1.8%. But the trajectory largely of the markets has now been changed for the better, and we'll hope the last hour continues to do so as well. In terms of the sectoral heat map, also very quickly gives you that perspective of these movers. You are watching and looking at the Nifty Metal, which is up 3%. We've been flashing Steel Authority of India now at a 15-year high, the biggest move that we've seen for the stock, while the Nifty IT continues to be in the red for now, and auto also marginally. The mid cap and the small cap also is this something that you want to just put some perspective on as well, because the earnings haven't been too bad. So you're seeing a recovery from the lows for the mid cap, 150 up 1%. Small cap also trying to play catch up at this point of time, and finally the BSE 500 as well. Now here, Mahima put some perspective in the previous show as well, where you've seen stocks like Vodafone Idea now up almost 8%. Dixon is the one which is a very key one, and we'll put focus on India market close on this stock 8 again. It's largely been a miss on earnings, but the commentary, what is the expectation from the industrial EMS space, something that the management accepted was missed out on. Maybe they should have entered that a couple of years ago. Probably this could be the lowest point, or probably that the worst is over, is something that's reflective in the stock today as well. Embassy Developers, Berger Paints are highlighted as some of the other ones, while earnings for Cohance Life was a disappointer. Stock's down 6% right now. And Westlife Development, Westlife Food essentially is giving up some of its gains as well. So those are some of the individual movers, but let's go across and start taking your stock related queries now. Tapan Doshi, research analyst at CA-Tapan.in, now joining in. We'll be shortly joined by a technical expert as well. Tapan, very good afternoon to you. The first question, largely coming in now, this one, it's by Baba Saab from Karnataka, and he's holding down to Vedanta at 309. Now, we've discussed this stock, Tapan, with you in the past as well. Do you think that it's a good time to continue holding the stock, look at the other individual listings that will happen for this one?
Yeah, you can hold on to the Vedanta. Good afternoon, Puneet. I think the stock is currently doing well, and if you see the metal rally is still on, of course, I'll be excited for the Vedanta aluminum when it is going to list it. But currently, if you see the zinc and I think and even silver is doing well. So I think one can hold Vedanta for next 1 or 2 quarter more. Still, I think the margin improvement may be there for Vedanta. Yes, so please hold it for a little bit longer.
Well, the next question coming in is now on ISGC Heavy Engineering stocks trading just up 1% today. But our viewer V Mulli from Bangalore has bought it at the current market price, essentially very close to that as well. Tapan, do you track this counter and any view for Murli?
Well, ISGC, if you see the stock has recovered a little bit from the bottom, and if I see the profitability, the problem with this stock is that the revenue is not going up. No, 3 years revenue is just 5%, but profitability is going up. But I think the margin improvement is there, but improvement in the sales is not there. So my take is that no, don't add to this stock. If you having the stock, please hold with a stop loss. Unless the revenue doesn't come, I think better not to invest in this stock.
Got it. The next question coming in now, it's on IRIDA. And Tapan, we've discussed the stock multiple times in the past, but at 128, Shankar from Bengaluru is asking if it's a good time to average on to his already a position of about 1,100 stocks and 1,100 shares that he's holding. Would you recommend that, or is there any better play in the space that IRIDA operates in?
See, IRIDA mostly give loans to the renewable companies and all that, and I can see there's some pressure in the solar companies, okay, and I think the already valuation-wise, it's quite expensive compared to PFC and REC. So looking at the long term, I'll talk about the long term. I think at this level, no, I'll not go for IRIDA. I'll go for better with PFC. I think long term there, the safety is there and maybe better returns maybe in future.
Got that view, and probably it had run up quite a bit upwards of 200 and now just basically seeing that correction. So even though it's fallen quite a bit at this point of time from those highs, Tapan Doshi recommending that there are other better plays like PFC. You also see the integration of REC over the next few months as well. The next question that's coming in is from Sarat, and his question largely being on Electra Green Tech. Bought shares at 1,630, so he is currently in the loss and holding 295 shares. Tapan, we've seen essentially the other day as well, Prime Minister's appeal to use diesel and petroleum products as less as possible. And we've already seen some states taking the baton for EV buses. What's your view for Electra given all this backdrop? Should he just average down at this point of time, lower his target price from 1,630?
See, if you see Electra, its valuation is quite expensive, no doubt about it. But this company is doing well and they have a good order book also in future. Even if I see the guidance is also good. The only thing is because the stock gone up a lot and valuation is there is always you can say profit booking. So my take, if anyone wants to enter, just wait for some time, maybe around 1150 odd. If it comes down, you can add it. Not at this level. I think at this level valuation is a little bit high, but the company is good.
Company is good, valuation slightly more expensive at this point of time. Got that view, Tapan. The other one, it's we've been getting a lot of queries on IT at this point of time. E. Venkatraman from Bengaluru has 1 lakh rupees to invest, Tapan, and he's saying that a lot of the IT stocks are at 52-week low. The likes of TCS, Infosys, he's mentioned as well. He wants to know if it's a good time to enter this space now for at least a 15 to 16% appreciation. What would you recommend, Tapan? There's a lot of moving parts here, right?
Yeah, of course, there are a lot of moving parts. And see, honestly, I'm bearish in IT from last 1 year. And that's why we are not recommending any IT to our clients. But from here also, I think OpenAI created some another department also for the deployment of AI. So that is where TCS, Infosys are working. So you can see there is competition everywhere, and that is where the margins will be a problem. Now, because it told 15-16%, the best bet. Honestly, I am not recommending, but the best bet is, I think, Coforge and Persistent. These are the 2 stocks. If you want to go, you can go in a SIP level, but otherwise, large caps, no.
Got that view, Tapan. But let's go across, take another caller from Pune. And, Mr. Gupta is joining in for a stock query. Mr. Gupta, very good afternoon to you. What's your query?
Yeah, sir, query, I purchased Sterlite Technologies,
Okay.
200 shares at the rate of 160 rupees.
Okay.
Sterlite Technology.
And is this for the short term, Mr. Gupta, or for the long term that you bought
No,
it?
I can hold it for longer period.
Okay, you can hold it for longer period as well. Got it. Well, Tapan, let me come back to you then, because he's almost, up 2.5 times his investment. What would you recommend him to do? Continue holding or book out some profits?
Well, first of all, big congratulations. From January 86 rupees gone to almost 400 rupees. So big gains. And now, see, Sterlite is in a currently favor, and now everything is working for Sterlite. Even the theme is for light. So I think he can hold it, but the valuation is too expensive. So my take is little bit profit booking should be there, and keep a stop loss. Okay, I think stock has run up a lot, so I'll not tell him to add, but yes, profit booking little bit and keep a stop loss in place. 10%, 20% now.
Got it. The next, viewers, as you might have seen, Rahul Jain from JM Financial also joining in. Rahul, very good afternoon to you. Let me pose a question to you very quickly on BEL. Uma from Bangalore actually wants to know on the charts if it's a good time to enter the stock. We've seen some pullback from that 450 odd level. Any view that you have on BEL now on the charts?
Yeah, correction, it is Rahul Sharma and not Rahul Jain.
Pardon me.
Well, coming to BEL, the defense pack continues to remain very robust. The Nifty defense index continues to do well over the medium term, short term. And today we're seeing a very sharp bounce back in BEL happening. My view is once it crosses 435, we could see very well the stock heading towards 450, 460 on the upside. So one can look to buy at these levels, maybe add once 435 is taken out. And the stop loss can be maintained at 425 for long positions.
Got that view, Rahul, and pardon me for the incorrect name, but let's go across, take another caller now from Bengaluru, and Venkat is joining in for a stock query. Venkat, very good afternoon to you. Welcome to Ask Profit. What's your query?
Good afternoon, Puneet. Very good afternoon to the members also there. And in fact, yesterday I sold some stocks of NATCO Pharma.
Okay.
And I have to invest about 75,000 rupees. I would like to invest.
Okay.
And I have shortlisted two stocks, Sai Life Sciences and CG Power.
Okay.
And out of these two, which is the best one? Or do you advise me to invest in both the stocks or any other good stock in which I can invest?
And Venkat, would you want to invest in both of these or either of these names for the long term?
Yeah, for a long term, I'm looking for about 2 years.
Okay, got it. And do you have any existing plays, Venkat, in either the pharma space or the industrial space like CG Power? So do you have any other names in these space?
Pharma, I don't have anything. I was holding only NATCO Pharma.
Correct, and you sold that off.
And it ran up very heavily, and that I sold it off.
Got it. Well,
and the power also, I don't have any stock as of right now.
Got that view, Venkat, and thanks so much for calling in. Tapan, he wants to invest between Sai Life Sciences or CG Power. Which is the better pick for the long term?
I think CG Power is quite good now. If you see the semiconductor unit is going to start. Of course, it will be a slow mover, but I feel that much more safety is there. And maybe in 1 or 2 quarters, their semiconductor unit will start, and there also revenue will be there. Again, this whole segment is quite in demand. Of course, the stock has gone up a lot, but this company is good. The management is also good. So from safety point of view, I'll go with CG Power.
Got that view, but let's go across, take another caller now from Pune this time, and Vinay has a stock query for us. Vinay, very good afternoon. What's your query?
Yeah, good afternoon. See, I have a lot of Larsen & Toubro shares.
Okay.
Around 2,000 shares bought at 2,500 rupees. I want to replace it partially. Let us say about 1,000 shares. I have to replace it by which 1 or 2 better stocks which have much more potential growth in the next 2 to 3 years compared to L&T.
Got it. And Vinay, so this is of course a very big position, almost 50 lakh rupees that you invested, and actually it's worked out very well for you. Many congratulations.
Thank you.
So how big is this one position? Is this largely more than 50-70% of your portfolio, or do you have any other stocks, or is this largely majority of it?
No, I have many other stocks, but this is more than 50% of my
more than 50%.
entire portfolio.
Got it. And did you start accumulating it very early on, and you've been accumulating it for a while? Because 2,500, I'm guessing you took the advantage during the COVID times, during 2022.
Yeah, that's right.
That's right. Got it.
That's right. I have been accumulating from that time onwards.
Well, Vinay, it's definitely worked out for you. 28 lakh rupees. Many congratulations. But Tapan, he's bought Larsen & Toubro at a very interesting time, held on patiently, so his gains are quite visible. Would you recommend him to reduce that position a little bit now for Larsen, given the uncertainty in Middle East? We've seen that happen. And with that sum, where would you want him to invest? What's a better pick? What a better space right now that you see for the long term?
So for the long term, now, of course, he can reduce his position. For long term, I'll recommend three segments. Like one is EMS sector. Like Dixon yesterday came with the result. Okay, so even Sirma SJs look good. Not because this EMS sector is going to grow for next 2 to 3 years. Even he can go for hospitals. I think Fortis or Apollo, they are also quite good. Now, there also good revenue will go up. And another is hotels, Indian hotels or even ITC. There also you can see. I think these three segments will have a secular growth for next 2 to 3 years. So he can diversify if he wants.
Got it. Well, thanks so much for that, Tapan. And hopefully, Vinay, that answers your query as well. The next question coming in now, this one, it's from BSE actually. And yet again, Srinivas Rao from Hyderabad has sent across this question. And is in gain. So he's holding 20 shares of BSE. He's not mentioned the buying price, but he's in profits of almost 59 to 60%. So he must have bought it, less than 2,000 rupees given the current market price. Rahul, his question being if he should, book out some of those gains now, now that it's, run up quite a bit. What's your view?
Yeah, it would be prudent to take some profits off the table. The stock has done stupendously well over the last 1.5 months, and the view remains that around 3,900 it is better to take profits. So maybe wait for a dip for any re-entry. But as of now, it's wiser to take money off the table.
Got that view, Rahul. The next question coming in now on TVS Motors, and Anjali from Bengaluru is holding shares, 25 shares at 3,518. Now, Tapan, results came very, very recently, just an hour back, and it's been a strong show yet again for the company in Q4 and FY26. Should she continue to hold or sell?
No, hold this stock. Now, this company has been doing good for last so many quarters. Again, leader in EV. And now they have a very strong base. And again, if you see their distribution is quite strong and the service is quite good. I think from here also, as the more preference is given to EV from here, I think she can hold this stock. Of course, little bit expensive, but give a good return over the time.
Got it. Got that view, Tapan. But let's go across, take another caller from Bareilly, and Arvind has a stock query for us. Arvind, what's your query?
गुड आफ्टरनून सर मेरा क्वेरी है रिगार्डिंग पॉलीकैप के मेरे पास 5 शेयर्स हैं 5600 पे सर
ओके
कि मेरे को 5 साल के लिए होल्ड करना है पॉलीकैप को मैं और यहाँ पे एवरेज करना चाह रहा हूँ 9,000 के आसपास जो चल रहा है अभी तो मैं इसको लेना चाह रहा हूँ मेरा ऐसा मतलब मुझे ऐसा लगता है इसके टारगेट 5 साल के अंदर 28,000 से 30,000 के टारगेट आ सकते हैं ऐसा पॉसिबल है क्या?
मैं ये तपन जी को पूछता हूँ।
अच्छा लग रहा है
तपन, पॉलीकैप पे आपकी क्या राय है? क्या अरविंद को स्टॉक में अभी और पैसे डालने चाहिए? उन्होंने 5,600 पे लिया है, बट ये एवरेज करने के लिए अच्छा मौका है?
नहीं, पॉलीकैप ऑफ कोर्स अच्छा स्टॉक है और आगे जाके जिस तरह से पावर सेगमेंट में इन्फ्लुएंस हो रहा है, इवन डेटा सेंटर्स आ रहे हैं, तो पॉलीकैप ऑफ कोर्स इन सब में भी डिस्ट्रीब्यूशन प्लस रियल एस्टेट भी ऊपर जाएगा, तो आई थिंक सेक्युलर ग्रोथ है, उसमें कोई डाउट नहीं है। स्टॉक थोड़ा एक्सपेंसिव है, तो अगर आप चाहो तो इसी सेक्टर में जैसे आरआर केबल है या फिनोलेक्स केबल है, उसमें थोड़ा डाइवर्सिफाई कर सकते हो करना हो तो, लेकिन यस 4-5 साल ये पूरा सेगमेंट अच्छा करेगा तो यू कैन स्टे इन्वेस्टेड। अगर ऐड करना है तो एवरेज कर सकते हैं, कोई दिक्कत नहीं नीचे को है।
Got that view. The next question coming in on Tata Elxsi. Our viewer has bought shares at 1108, and this is Priyanka who's holding 220 shares. So she's up almost 4x at this point of time, and asking if it's an advisable time to exit this counter. Rahul, would you recommend that?
Yes, absolutely. IT stocks have been under the hammer for quite some time now, and even the big names in the IT space have went on to break their key support levels. Tata Elxsi, as of now, the closest support is 4,000 rupees, and below that, we expect the buyers to continue downwards. So it would be prudent to book, come out of the stock and look for better opportunities in some other sectors. IT is in avoid at this point in time.
Got that view, Rahul. IDFC First is the other one that Vedant Garg is holding on to at 75. Tapan, his question being, if it's a good stock for the next 3 to 5 years, would you recommend that, given that there's a lot of options now, right, in the private banking space available at much better valuation compared to historical levels?
I'm not convinced with the management. Means recently, the governance issues and all that, and that is where I have a problem. Again, this every time management is saying that we are a big guidance they are giving, but they are not able to achieve it. So yes, I will not go for IDFC First. But I think better options are available. You can go to Federal Bank, Karur Vysya Bank. I think DCB Bank. I think they are the better option if he wants to go.
Got it. Well, let's go across, actually take a quick call before we start our rapid fire round. And Aruna joining in for a stock query. Aruna, what's your query?
Yeah, good afternoon, sir. Good afternoon to all of you. Thanks for taking my query. I'm having transformers and rectifiers at 295 average, 1,000 shares.
Okay.
Okay, what is the support and resistance? Shall I buy further? Is that a good decision? Or what is the resistance in the upper side?
Got it. Well, Rahul, you've heard her query. What would you recommend Aruna to do? Stocks up 4% today.
Yes, so the stock is continuously making higher high and higher lows since January this year. And currently it is trading close to its support area of 295, 295 to 300 is the support area. So I would advise to have a trailing stop loss at 295 and hold for higher targets of around 350 to 360 in the next 1 month or so. So stay invested in the same. The view remains positive.
Got that view. Well, it's time now for the rapid fire round, viewers as well as Rahul and Tapan. Let's get across the first query on Sagility, bought at 43 rupees, 2,800 shares by Raj. Tapan, Q4 was decent. Should he continue to hold?
Yeah, please hold.
Sunil Kumar is asking the next question. This one's coming in. Actually, it's a very small stock, so I'll ignore this one at the moment. Sirma SGS bought at 1,065 right now by Vinay from Pune. He wants to know if he should continue holding. Rahul?
Hold.
Next question coming in on Aurobindo Pharma, bought at 1,335. What would you recommend here, Tapan? Is it a good time to hold or book out and play in the other space, in the pharma space? Any other better pick?
No, currently hold.
Okay, Vedanta bought at 358, and this is after the demerger price. Tapan, you gave a view. I think should he continue to hold basically at this point of time?
Yeah, currently he can hold.
Arvind wants to know a view on HDFC Bank. He wants to add into this counter now. He's not bought any shares. Tapan, should he do that?
No, I'll give an option of ICICI Bank or Axis.
CDSL bought by our viewer at roughly around 1,080 to 1,100. He's asking Rahul if he can go back to that level, or is there further up move on CDSL from here?
Yeah, I would advise to exit at this point in time.
Got it. Next one is Mohan from Coimbatore. He's asking if it's a good time to buy Biocon for the long term. Tapan?
No.
Ramana from Bengaluru wants to enter into M&M. Good time to buy, Tapan?
Yeah, he can.
Next one is Sharath from Bangalore. He is holding on to Grow shares at 195 and wants to know if he can add a few more Tapan for the next 1 year.
No. Wait for the date, then only do.
Got it. Venkat from Chennai is holding on to 200 shares of Swiggy, bought at 350. Rahul, would you recommend him to continue holding, average down?
Yeah, can average at these levels with the stop loss placed at 245.
245, got it. Well, that's the end of the rapid fire as well as this edition of Ask Profit. Rahul as well as Tapan, thanks so much for joining in, giving us your views across a whole bunch of stocks and spaces. But viewers, thanks so much for sending in your queries and hopefully we could get a lot of them. But thanks so much for joining in. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm NIIT Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show.
Hello and welcome. You're watching India Market Close on NDTV Profit with Sharad Dubey and myself, Hira Daria. An interesting day of trade. You know, last couple of trading sessions, Sharad, we have seen that pain.
There was a lot of pain.
Absolutely. But that minor bounce that has come in today, not sure if this is a respite or not.
It seems like a technical up move.
Exactly. I mean, would you be able to call this a short covering rally right now?
Yes, that's right. Right now, most of the FNO counters are seeing a good up move, especially the large caps.
So I think that's what is keeping you here. But the question is, a closure above the 23,500 level does not seem to be in sight as of now. If we close below 23,500, there is going to be a little bit of downside pressure that will come in terms of tomorrow's session as well. But clearly, 100 points up move, 0.5% gains coming in there in terms of Nifty 50. Bank Nifty as well. A very similar trend is what you're seeing. And in the last couple of trading days, viewers, the setup with regards to Bank Nifty has been slightly more weaker as compared to Nifty 50 as well. So that is something that everyone needs to keep an eye on. But what is encouraging right now is to some extent the advanced decline ratio, right?
And it has maintained, if you could just show that advanced decline chart, we'll understand that there's a good value buying happening in the small cap and mid cap. This was missing over the last two trading sessions. Here you can see
from the convergence,
yes, exactly,
absolutely.
and now it's being maintained.
Since from midday to now, pretty much steady in terms of the advances and declines, and that is what is giving you some bit of respite right now. Let's quickly look at the heat map in terms of Nifty 50, and then we'll look at the sectoral indices as well. Clearly, it's more of I would say it's more of 50-50 kind of a scenario here. Still more of greens versus reds, but names like Asian Paints, Adani Enterprises, Cipla, Hindalco, BEL, Adani Ports, so Adani group of companies are holding up to gains today. Bharti Airtel, which was also seeing some smart moves in yesterday's session, has continued that uptrend. What is losing out is a power grid. Infosys, some of the auto majors are also under pressure. IT is somewhere under pressure, and few of the financials as we speak. But the kind of gains that you're seeing upwards of 2%, that first line of 10 stocks seems to be pretty strong in trade. Let's look at the contributors of Nifty 50 as well right now, and then we'll see what's happening with the broader markets. There you go. Bharti Airtel, L&T, HDFC, Tata Steel are the ones which are contributing. What's losing out is your Infosys, M&M, TCS. So it's mainly your IT, auto, which is slightly on the weaker side. Broader market, Sharad, is also pretty interesting, taking the way the advanced decline breadth is.
Yes, and if you look at the mid-cap indices, right now it's near the day's high level here, and just pull out the small-cap index also. That means we're seeing a good value buying happening. It was missing on the last two trading sessions. And if you could just pull up the BSE 500 index to show you the contributors also, which stocks are doing well in the trade. That's also something to look at. Of course, the Q4 numbers is something, Hiral, that's where the good impact is also coming in.
And BSE 500 constituents is something we should be watching out for to see the kind, or NSE 500 as well, to see the kind of range that you're seeing in terms of gainers and losers in trade today. And apart from that, there you go. Metals, Dixon is an interesting one. Vodafone Idea has been having a good run. Your paint counters are doing well. So with an Asian Paints, you have a Berger also, which is contributing. But power is seeing some bit of profit booking. Westlife Foods, Sun TV, a very interesting mix that we see here. Very quickly, let's just pull up the wicks, and then Sharad can take us through all the factors that one should be watching out for over the next 1 hour. If we can just quickly have the India wicks. There you go. I mean, it's pretty much on the flat line from the highs. It's come down. We're still at 19.3, so you can't say we're not in the elevated zone right now. There is that cautiousness which is still prevailing, is what India VIX is also indicating, Sharad.
Well, exactly, that's right. But let's look at the factors to watch out for, especially for the traders. What are the key factors should be there? There's a short covering at play in major large caps, and the further consolidation might be there, because the strength which is there, that's a big question to be asked for. That's why I've given a Nifty range. That range is between 23,200 to 23,600. So we can see a little bit of consolidation. Nifty Bank also, the range is on the higher side, 53,000 to 54,000 levels. But remember, this is a technical up move happening. But interestingly, the good part Hiral mentioned, the value buying is happening in the small and mid cap space, and that is something which you should be looking at as well. Strong buying seen in the metals, telecom, and the consumer durable pack. These are the three indices which are doing really well, and rupee again hit its record low levels. There was a minor improvement initially, but then again it hit its record low levels. Crude has snapped its 3-day gaining streak, so it is kind of giving some positive outlook going ahead. But the European markets, I checked, they have opened in the green. So of course a little bit of risk of sentiment is coming down, but the main focus is on Trump and Xi Jinping's meet this week, as well as how things move ahead. And of course, joining us, we'll have Nilesh Jain, Head and AVP at Technical Derivatives Research Equity at Centrum Broking. Good afternoon, Nilesh. It's always a pleasure to have you. This markets we are seeing for both Nifty, Nifty Bank, the way the placement is happening, it looks like it's a slight short covering at play. But will this sustain going ahead? Because there aren't much major triggers except the global geopolitical developments. So is this just a short covering rally, or do you think some levels can be sustained, especially on today's closing?
Very good afternoon to you. Good afternoon, everyone. Well, Sharad, first of all, today's move after 4 days of consecutive decline looks like merely a pullback trade. As you have rightly pointed out, it looks like a short covering move. But as Hiral pointed out, 23,500 is an important level that needs to be sustained on the upside. Then only we can expect a follow-up of this particular pullback towards 23,650 to 23,700. But as of now, looks like merely a pullback trade. Even if you see volatility index in the weeks, we haven't seen any meaningful correction in the weeks, and it is still at an elevated level. So there are high possibility that we may see once again supply coming in at the high level. So one has to remain cautious. And on the closing basis, 23,500 is an important level that we are keeping an eye on. And if at all it manages to close above the same, then there are possibilities of a further short covering rally towards 23,650 to 23,700. On the lower side, there was a gap area that is yet to be filled, and quite possible going forward we may see once again supply coming in and Nifty may make an attempt to fill that particular gap. But on the contrary, if you see the broader markets where we have seen huge amount of attraction coming back, mid cap and small cap indices are looking better placed, and that's where the action is right now. So we expect this further momentum to continue. Specifically from a sectoral point of view, metals continues to remain strong. So that is something that we are keeping an eye on.
So metals is one space which is seeming to be very strong. In fact, that sector is also trading at the day's highest levels as we speak. Naresh, with all of this, what would your top picks be at this hour?
Well, Hiral, first of all, we are focusing on buy ideas. As I mentioned, that metal is something that we are keeping an eye on. So within metal space, within aluminum space, in fact, we have seen a very good attraction in Hindalco and Nalco, both the stocks. So specifically Hindalco, this particular counter looks like giving a very good close today, and we can expect a follow-up on the upside towards 1090 to 1110. So 1110 could be the ultimate target that we can expect in Hindalco. We are expecting a fresh record high from here, and 1060 should be the stop loss. Apart from that, if you see across broader markets, we have seen a very good attraction coming back. But on the other hand, if you see IT, that's one space which has been a laggard. So that's a short. That's short in TCS. Particularly, we have seen a major crack in the large cap IT stocks. So TCS looks weak, and we are expecting a follow-up on the lower side towards 2250 to 2230. So these are the two targets on the lower side, and the stop loss can be placed at 2320.
That's the view coming in for TCS. But moving on, Dixon Tech, let's get that stock in focus as well. Of course, stock is buzzing. Stock is at its day's high level, interestingly, up 9% on the back of earnings. The company, of course, came out with a mixed set of numbers as the uncertainties there over the Vivo deal. But of course, Puneet is here with what's actually making a big rally in the stock. Of course, numbers were not that attractive, but is there something else which the street is factoring in? Stock is up 9%.
Well, most certainly it's looking past the numbers at this point of time, and probably forward-looking statements very strong for the company as well. So quickly, we've gone through the numbers through the day as well, but just a 2% growth in revenue. EBITDA was down almost 7%, and in terms of margins, at 3.9% also wasn't the greatest. Profits also were impacted and down 36%, but there was a one-time impact in the base year. So quarter 4 FY25 had, from Aditya Vision was the fair value gain actually of 250 crores, and hence that's the biggest jump. But in terms of volume guidance, that's the first key aspect. Now, the company has said FY26 volumes will be flat at 32 million. So will be similar. So FY27 volumes similar to FY26. And this is excluding for Vivo. And those, the approval is still yet to come for the same. 12 to 15% value growth is seen in this counter, given that memory chip prices have increased. So you could see a higher value growth for the first time compared to the volume growth for Dixon in FY27. In terms of what the management has said, they've admitted that the industrial EMS segment was an opportunity missed by the company. They've accepted the fact. They've also had a lot of meetings and conversations around this, and they are now looking to enter the space over the next 2 years. They should have entered it in 2024 is what Atul Lal had said on the call yesterday. So that's one. And finally, in terms of what we've seen and what's actually working, because these were the two key factors that were the key aspects, but management is now saying that the Vivo deal is very close. It's gone on for 17 months. Exchange filing was in December of 2024 when it was first announced. But apart from that also, looking at two sizable acquisitions in FY27 to the tune of 3,000 to 4,000 crores could well be in the industrial EMS space as well. Aerospace defense for the other players have done very well, like Sirma. So the company is now getting and looking at it very, very seriously. And company has the management capability as well to scale up manufacturing. Mobile PLI 2.0 could be the other focus. Now, largely expected to be more export-oriented this time around, but approvals are expected to come in May. And finally, the components, display modules, as well as camera modules is the next big opportunity, where it is expected to come in quarter 3 of FY27. So those are some of the key factors that are working in favor of the company. Of course, the Vivo deal continues to be one which is majorly in focus, but the question is the worst largely over for Dixon Tech, the market's having a say in the same.
Yeah, and I think, thank you so much for that, Puneet. Sharad, EMS players have been in focus as well right now. You have PG, Electroplast, Sirma, for that matter, even Keynes. Last couple of quarters.
There has been a significant correction from their peaks
as well, right? And now that bounce back that's coming in is going to be interesting. Now, the question is how sustainable this bounce is going to be, because all of them are seeing some good gains today. Samir Dalal of Natwarlal and Sons Stockbrokers also joins in. Samir, welcome to the show. Always a pleasure to speak to you. Your view when it comes to Dixon Technologies and the EMS space as a whole, because as Sharad was also mentioning, from their peak, good amount of correction that's come in terms of EMS. Yes, there are a few overhangs when you talk about supply chain constraints as well. And in terms of what's panning out when you talk from an earnings perspective, how would you look at it?
Whatever Puneet said is very valid, and that there is a bit of a hope that things start reviving very soon. But you can't rely purely on hope when you make investments, right? You've got to also see what the fundamentals justify. So for Dixon Tech, yes, the Vivo deal is a very crucial thing. If that goes through, that would be the growth engine for it. Because when you're trading at 40 times, 42 times earnings, you need growth to justify those high valuations, right? 40 times, if you can grow at 35-40%, then PEG of 1 is fair. Even if you go to 25, it's still 1.5, 1.6. So growth is important, and the fact remains that value growth is not as important as volume growth, because when the volume grows is when the actual profitability will see an increase, because the operating leverages will play out. So if the Vivo deal goes through, which we are also thinking should happen soon, then I think the possibilities that Dixon will continue its trajectory up and probably move up closer to 13,000, which will justify, these high valuations. If it does not fructify over the next quarter or maybe 2 quarters, I think the stock will probably move down closer to 9,000. So that needs to be watched very closely. As for the acquisitions that they want to make, well, till they actually disclose something, we really can't decide whether they're going to be EPS accretive, whether it's going to drive their ROEs up or down. But we need to wait and watch for what happens there. To just assume that 2 acquisitions are going to be very beneficial to them, I think that's difficult for them to take. As for the entire EMS space, so, companies that have been dealing with the defense sector or with the data centers have obviously been doing extremely well, because those are the 2 spaces where growth has happened. However, if you look at companies like PG Electro or even Impact Durables, they actually have not had a great time because of the slowdown last year in the sales of ACs. And, when we are talking to certain people in the current industry right now, that this year also, even though we've had such a horrible summer, the AC sales have not been that great is what we are hearing. So if that is the case, then I think the rally in some of these consumer durable players might start fizzling out. So we'll keep a keen eye to see what actually the sales numbers are coming out at the end of this quarter, and then take a call. But valuations in PG are still not very attractive.
That's an interesting take coming for the consumer durables and EMS from Samir. But moving on from this space to the pharma space, Cipla delivered a mixed set of Q4 numbers with inline revenue but missed PAT estimates. The US market was a key drag, and the India market actually boosted the numbers. Varsha is here with more details. Varsha?
Yeah, overall, as you rightly said, revenue was in line, but EBITDA and PAT was a mess, and a weak quarter was actually expected. And the reason why you're seeing the stock is up is almost because of the short covering, But onto the numbers, well, North America decline impacted growth. India and Africa was strong. US remains weak. EBITDA margins contracted due to lower gross margins and higher employee costs. And the API segment was actually weak, impacting overall profitability. And of course, lower other income impacted profit as well. Onto the India business, well, as expected, India business was strong at 15% year-on-year, double-digit growth across, generics, and chronic mix improved to 61% overall. Key launches across respiratory, anti-diabetes, and dermatology are some of the key positives. Also, they did also, partnership with Eli Lilly and Mankind. Onto the North America, well, contributes 22% of the sales, decline 26% year-on-year. on year. US pricing pressure continued impacting growth for the company. While One Africa, if you see, this was the strongest growth area for the company. Growth was almost 1.4 times market growth rate, and 18 new launches were there in FY26. So overall, yes, a weak set of numbers, but now the shift remains how FY27 will pan out for the company, considering the outgoing Umang Vora has been now no longer with the company.
Thanks a lot for that, Varsha. Just a quick technical chart check, Nilesh, on Cipla. A good buying momentum coming in the second half of the trade, and it's actually sustaining. So your views on that?
Well, absolutely. A very strong rebound after, in fact, almost 4 consecutive days of gains. And this rebound seems to be likely to be carried forward on the upside towards 1360 to 1400. So the setup looks positive. In fact, majority of the pharma counters have a better setup. And as far as supply is concerned, it has reclaimed its 21 as well as 50 DMA. So we can expect a follow-up move to continue on the upside, keeping a stop loss below 1300. One can go long.
Okay, so that's with regards to where Cipla goes. But moving on, Prime Minister Modi's call to avoid foreign travel for a year could hit India's outbound tourism industry. To discuss in detail on the impact of this appeal by Prime Minister, we're now joined by Alok Bajpai, Group CEO at Ixigo. Alok, welcome to the show. Always a pleasure to speak to you. This is Hiral on the side. My question to you is, what do you make of this appeal that has been made by Prime Minister Narendra Modi? Because it's not really directed towards something specific. It's more generic when it comes to country India is concerned, and he's making an appeal across segments. How are you reading into it?
I think it's related to the fact that the country needs to preserve foreign exchange at this point, and therefore you see the what's happened on the gold side as well, in terms of imports becoming more expensive, but also the fact that look, Indians spend between $15 to $17 billion a year when they travel abroad, right? And I think one area where we really need to work on as a nation is inbound tourism, where we are at sub 10 million foreign tourist arrivals a year. So I think it's the need of the hour probably for the nation that this appeal has been made, and we expect that there'll be some domestic substitution that will happen. In people not traveling abroad but choosing to travel to Indian destinations instead, right? So I think it's something that's too early to see yet in our searches and bookings, but that's what I expect to happen.
Hi, Sharad here. Interestingly, the summer holiday season is going on, and of course, a lot of demand is coming as well for the domestic locations and the higher priced segment also. What are the current trends actually looking like? Is there any cancellation happening? Because there's a global uncertainty at play as well, especially in the European markets. How are the booking trends looking like for both domestic and international currently?
So, I think domestic travel, this is the peak season. It's summer vacation time. Most Indians would travel in the months of May and June, and we've seen the upswing just like we see every year, in terms of domestic as well as international. And of course, the announcement is just a day old, but I think what has happened is, look, there are two types of travel that people do. There's leisure, discretionary travel, but there's also utilitarian travel, meeting friends and family, visiting relatives. Now, some of that, if your relatives are abroad, or if there is a need of the hour for to still travel abroad, I think some of that will continue. Of course, Middle East travel was already somewhat impacted from March, but we also saw substitution starting to happen in March itself, right, where some people started to look at domestic breaks instead of international breaks. So that substitution is what we expect will accelerate. For Ixigo, we've always been a lot more domestic focused with our strong, rail and bus businesses, and so that substitution over time, should be helpful to us, is what we believe. And we have also entered the hotels category recently, where we've started off with a smaller market share, and that continues to grow. So I don't foresee any short-term sort of impact that is negative for the industry, because domestic is still the mainstay for most companies.
Alok, so domestic is something that even an Ixigo will watch out for. Tell me one thing, for an Ixigo, between domestic and international, what's the kind of revenue breakup that you have right now? Because for that quantum to be made up for in terms of margins, revenues and profitability is something that investors will watch out for. And then I have a second question for you, if you could give me a response to this one first.
Yeah, so if you see our disclosures, right, and the last disclosures were in December quarter, 20% of our flight GTV was international, right? So about 400 odd crores, a quarter was our international flight GTV. And that is a relatively small part of our overall business, because remember, the overall business is, in terms of run rate was about 17 to 18,000 crores a year, right? So in that sense, it's a relatively small portion of our business. And of course, we were still growing international very nicely year on year, because we have a smaller slice of the pie. But that growth, I think, will still come in, because there are pockets of opportunities where people need to travel, and there could be important events they need to attend outside. So I think some of that is going to continue.
Okay, a quick one, we've been hearing of a lot of flight cancellations as well that are happening with regards to outbound, inbound, international. Air India has come out and cancelled over 500 flights last week, and there are murmurs saying that other flights will follow suit. Are you hearing of any information on that front as to what's happening from the airlines?
Yes, so there have been some cancellations. I mean, it started with the Middle East in March, but certain long distance routes by Air India have been impacted more recently as well. But I think, in terms of demand versus supply, we've always been a supply constrained market, especially if you look at even domestic, right? So, train, it's hard to find availability on the train side. The demand is so much bigger than supply. Even on the flight side, we don't have enough planes that we're able to bring in, and therefore, fares have always been a little bit higher than what they should be if we had enough capacity coming in fast enough. So I think India has always been, in that sense, pretty much a supply constrained market. Even on the 4-5-star hotel inventory, we could lap up more supply at this point. And therefore, I'm not that worried about what's happening in the short term. We also must remember that in COVID, all travel was stopped, and then there was a lot of pent up that came in, the subsequent. In fact, our revenue in the COVID year was higher than the pre-COVID year, because in the 6-7 months where travel opened up, people came in droves, and I think that will happen eventually when things stabilize in the Middle East as well.
Right, thanks a lot, Alok, for that, for giving your views. It's always a pleasure to have you and giving the entire perspective on the travel industry and the impact. But moving on, sources tell NDTV Profit that the Union Cabinet has approved the coal gasification incentive scheme, and that's worth 37,000 crore rupees. Shrimi is here with more details. Shrimi.
Yeah, that's absolutely right, and it's coming at a very specific time, as we all know that we are grappling with the West Asia crisis, which is disrupting the entire supply chain, and this is coming with a massive outlay of 37,000 crore. But why this matters the most at this point of time is that the coal gasification actually converts your coal into synthesis gas, which can be used to produce all your fertilizer, chemical and synthesis natural gas. Now, despite, and the irony is that India has the world's largest coal reserve, and despite that we continue to import large quantity as far as your ammonia is concerned, your methanol is concerned, your fertilizer is concerned, and to reduce that dependency, this coal gasification scheme is going to play a huge role. And in fact, as far as beneficiaries are concerned, Coal India is likely to be the bigger beneficiary here, as what we are learning that this will of course open the revenue avenue for Coal India. going away from the traditional and the conventional way which Coal India has been doing. And in fact, this is going to convert your low grade coal into the high quality, and that's how you're going to reduce. We need to wait to learn more and the fine print of the entire scheme as the briefing is scheduled as 3 p.m. to understand the entire nuances of the scheme.
Okay, so that's with regards to where coal gasification goes. And, you know, when we spoke to the management of Coal India as well post-earnings, they have been of the opinion that this is going to be a big earnings driver as well for the company. Thank you, Shrimi, for that. Samir, a quick view when it comes to Coal India?
So, you know, we like the space, but we think the opportunity is good. It's a unique company, kind of a monopoly business. Look, thermal power is not going to shut even though renewable comes. There will be new plants that come about, so capacity growth will happen. If this coal to gasification happens, it's obviously a positive. But one thing you got to realize is that Coal India has not been able to, well, they've been able to meet, but they've not been able to scale up their production to where they could have probably and made a lot more money. So if they can address some of their supply side issues in the sense that they can produce more coal and supply to the domestic market, I think the stock can do a lot on the upside. But the fact remains that they've not been able to take advantage of the situation that we are in. And, you know, the other bigger problem as an investor is that there's always an overhang that the government may come up with an OFS anytime soon, and that supply, when it comes into the market, it kind of puts a cap on the, the upside. So from those two perspectives, we have not invested in it, but we think it's a great company. And if they can address the issues, the stock can go up quite a bit.
That's the view coming in Coal India. But Hiral, let's just see the rupee. It has hit its fresh record lows. Of course, earlier in the morning, we had seen that there was a good momentum, but that has actually fizzled out. If you just point out, the rupee has slipped and it's a fresh record low of 95.8 for the dollar. And Hiral, of course, the RBI interventions are also expected to kick in, but largely let's pull out the yield also, the 10-year yield, to see how much of that reaction is happening. It's likely to go up. If you could just show the India's 10-year bond yield also. Yes, there is a little bit of spike coming in the bond yield also. But Hiral, anything you're gathering?
I mean, you know, clearly if you see in terms of what the Indian rupee goes, the geopolitical instability that we have been talking about, that sentiment has been a risk off, and that's what has been impacting. There is a crude oil shock that this. It's not only India. Countries across they are grappling with as well. You are staring at a wider trade deficit, and that's the reason why you have Prime Minister Narendra Modi, who has been looking at making all the appeals as well. And there is a domestic policy sentiment that comes to the fore from here on. I mean, you will have the RBI policy coming up soon. What they will do is the key, but clearly 95.76 is what you're tracking. It slipped for most of the day. A fresh record low of 95.8 is what you're looking at so far. Though, you know, it'll be exporters who to some extent will be happy on the kind of exchange rate, but it's going to be the
like
importers.
A Pharma or an NIIT.
Your importers are the ones who are going to be, grappling under pressure. So that's with regards to where the Indian rupee goes. But before, we get to the next story, a quick view, Nilesh, I want to take with you as well with regards to where jewelry stocks are concerned on the back of the import duty that has come in. What are charts indicating if you have to look at any of them?
Well, Hiral, we have already seen a big crack in all the jewelry-related stocks, be it Kalyan Jewellers, Titan. In fact, the good part is that after a crack, the impact that we saw after opening trade, they are making an attempt to witness some bit of a pullback. So pullback trade is something that we are witnessing, quite possible that we may see some bit of a follow-up on the upside, but unlikely to be as sustainable because we have already seen a structural breakdown across all jewelry stocks. So overall, sell and rise should be the strategy.
That's with regards to where jewelers go. But thank you, Nilesh. Thank you, Samir, so much for joining in. It's always a pleasure to speak to both of you as well. But, we'll quickly slip into a short break. We'll be back with what's in store for jewelers as well in terms of the import duty and lots more other stories as well on the other side. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm NIIT Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
Welcome back to India Market Close, and the markets, what we have seen earlier at around 2 o'clock, it's relatively same, no major changes happening, and Nifty and Nifty Bank, both of them actually on the, we could say, on the positive side, but yes, a shade below that 23,500 mark. Of course, the metal pack is doing well, but the jewelry segment, that's also in focus. These stocks are losing sheen as government has doubled import duties on gold, silver and platinum, a move set to make the precious metals sharply costlier. Mahima is here with more details. Mahima?
Right, so, just to give a background as to what's happened, right? So earlier in 2024, July 2024, the budget had reversed this duty structure. They'd taken it back to around 6%, both the basic custom duty and cess combined. But that has now again been reversed. So there's a Uno reverse play here where now we're looking at basic custom duty at 10%, cess at 5%, and that takes the effective overall import duty at that 15% mark overall on import of gold and silver both. Additionally, jewelry findings will attract a duty of around 5%. Platinum findings will attract a duty of around 5.4%. And concessional duty provisions for import of catalyst or ash containing precious metals will also attract a duty of around 4.4%. Plus on top of that, concessional duty with regards to UAE imports will also be taken into consideration, and there will be duty hikes there as well. So that's point number one. Now, in terms of how this overall impacts companies, but before that, it's important to take a look at the gold import data as well, because overall in the past couple of years the gold import data has been rising both on account of value as well as volume. As far as FY26 goes, the overall estimated increase is around 24% in terms of value, but volume slightly, where FY25 goes, the downtick was around 4%. But India is the second largest consumer of gold imports after China, and we consume all the gold that we import. So that's why this becomes very important. Now, how this impacts jewelry companies as a whole is because, one, raw material cost will become expensive for them. So that means they'll have to keep more working capital, pay more interest on that. On top of that, demand could, see some subduing because purchasers could kind of delay their purchase because of this hike in duty. And lastly, in terms of where margins go, companies might not be able to pass on the full price hikes to the consumer, and that is why their margins will get impacted. And on the back of that, a lot of stocks remain in focus. All your jewelry names, from Titan, Kalyan, Senco to Thangama, LPC, Jewelers, etc., get impacted on the back of this. But then on the flip side, you have something like a Deccan Gold, which is doing fairly well because it's a minor and it benefits from this price increase. So this is the overall view of what's happened and its multiple impact on the economy as well as stocks.
Yeah, I mean, this is going to be interesting to see what actually pans out from here on. But, it's interesting the reaction that the street is giving out. You have Nitin Kamath as well, who's written on X that the news about import duties on gold and silver going up to 15% came late last night. And the interesting thing is that neither open interest nor prices, volumes in gold and silver have actually shown any unusual moves in the hour leading up to the announcement. So it probably tells you that this is something which is not really intriguing or ruffling any feathers from the investor community.
It's showing a good stability, and I also checked, of course, some ETF spike is there. If you could just show the silver ETFs, the gold ETFs, all of them spiking between 4 to 7%. But nevertheless, there isn't a lot of issues in the markets. Also, we are doing a lot of channel checks. and largely it is still stabilized. Of course, there's a clarion call is there, which we need to respect. But you see today itself, most of the ETFs are doing well in the trade as well.
Yeah, I mean 5 to 6% up move coming in. So I think the investor community is really happy when the ETFs are going up. So that's what we're looking at in terms of where government hike in duty of gold goes. But we are slightly delayed when it comes to Somit Sarkar giving us all the chatter from the dealing room. Somit, a day, where we are seeing some bit of respite that is coming in terms of market. Sharad and I were just chatting that there is some bit of short covering today. Question is, from the dealing room, are you sensing any stability or any situation where the thought process now is that, yes, there is some bit of respite?
There's hardly any respite in the market, Hiral. It's just 44 points up. That's hardly anything from what we have seen in the last 4 trading sessions. So no respite that we are seeing in the market. There is still panic. There is still a sell on rise strategy that dealers are opting at this moment. Few stocks that dealers have highlighted in trade. Firstly, it's Fractal. The stock is down around 10%. But dealers are indicating that a large prominent HNI has started to buy this counter at lower levels in trade. So one should keep an eye out for Fractal. For KFinTech, a negative news coming in here. There are sell flows on the large HNI and there's a buzz of one important contract getting repriced at a lower rate for KFinTech. So that could be negative for the earnings of the company going forward. So keep an eye out for KFinTech as well. And when it comes to SAIL, that stock is up 14%, biggest intraday move that we are seeing since July 2020, and the stock is now trading at its 15-year high. So when I inquired with dealers, what they are saying is that this move is largely because of some buying actions seen in metal pack, and also do remember that SAIL is in F&O ban, so a short covering move is happening there as well, and that has led to this increase in share prices. And there is also a buzz of a potential inclusion in the MSCI's next review, and that could also be one of the reasons. So these are the 3 reasons why basically SAIL has shown this kind of a move, but most likely it is also because of the short covering that we are seeing, given the fact that the stock is in F&O ban.
It's a lot for that, Somit, and markets slightly correcting. If you just pull out the Nifty index and Nifty Bank from the day's high level, correction is happening, and we are almost coming to the flat levels. Nifty Bank, the fall is much more. It's in the red right now, so a little bit of the strength which we are talking about, me and Hiral, that strength is giving up as well. Now let's move on. We have Abhishek Banerjee. He's the Vice President, Internet Lead Analyst at ICICI Securities, joining us. Good afternoon, Abhishek. It's always a pleasure to have you. There's a very long note which you have written on the New Age segment, but I just wanted to understand what are the key takeaways from this, and eventually which are the stocks where there is a good risk-reward ratio from here.
So this note is not really a buy-sell recommendation kind of a note. It is a note which kind of aims to be a compendium of all that you need to know about the Indian New Age tech ecosystem. It is where we have given all the market sizes and what could be triggers, what could be potential hazards, and also what some of the expert takeaways for each subsector. So it's more of a sector note, right? It doesn't talk about stock picks, etc. But that being said, some of the key takeaways would include where we are today in new age tech adoption versus the world. And one very interesting data point that you'll see is that we are almost at the same GDP per capita levels from where China actually took off in 2006. Right now, the value of the dollar has reduced from those times. But that being said, at $2,000 GDP per capita, we could see a takeoff, right? And that will benefit all consumer-centric names and even the new age tech names are likely to really benefit from that trend.
Abhishek, good morning, good afternoon. This is Hiral here. With everything that you're saying, I mean, it's a very extensive report where I think we need hours and hours to, if you have to discuss every bit and aspect of it, but as for a reader's choice, one of the best ones to have read so far. My question to you is, for an investor, if you have to look at what's happening in terms of AI and technology, what's happening with the evolution in the new age system, do you think buying new age tech stocks at this point in time with the way valuations are panning out would be the best choice to generate that kind of alpha or value that someone wants to look at?
Great question. Great question. And actually, we have tried to answer that in the note. So if you look from the 2000s to now, the last 25 years, you will see that the Nasdaq Composite Index has outperformed S&P 500 by 5x, right? And the only decade where it did not outperform was the decade of 2000 when there was a dot-com bubble crash, right? So I think it's a no-brainer. You have to kind of stay invested in the new age ecosystem. Yes, if you can choose a winner, then you can have outsized returns. But even without that, this segment has the ability to generate that much needed alpha for the portfolio.
Abhishek, for your views and a very interesting report made by ICICI Securities. It's always a pleasure to talk with you. Moving on, we are having Shivangi Sada, analyst at Equity Derivatives and Technical at Motilal Oswal Financial Services. Good afternoon. So Shivangi, the first question is the short covering which we saw, that strength is actually coming down. Is there a more sentimental negative moves going ahead for both Nifty and Nifty Bank?
Very good afternoon, Sharad. Thank you for having me. So we've seen that, of course, the indices did, kind of manage to have an attempt of recovery today. But overall, in the last 4 sessions, we've actually drowned by more than 1,100 points. So, of course, on account of that, today's recovery is very negligible. But some ray of hope, the attempts of buying from 23,000 250 odd levels was quite remarkable. But overall, there will be some bit of pressure that will prevail because global uncertainties are still on the rise, with India VIX nearly 19 today. So overall, unless and until this subsides down to 16 to 15 levels, we would see some volatile cues and swings in the market. A tug of war between the bulls and bears was seen in today's session, but we'll watch out for the important levels. 23,150 is an important positional support here for the index, with an upside cap at 23,800 marks. So this would be the take on Nifty, with volatile cues to continue.
So, Shivangi, what would your calls be for tomorrow? I know it's 3:10, so BTST is the best.
So, looking at the overall market, we've seen that selective pockets of buying can only be trusted and seen. My preferred pick for a BTST would be Hindalco, which has kind of surpassed its previous hurdle zones as well. And we've seen a consolidation breakout after almost 19 trading sessions on the daily basis. And overall, of course, we've seen that this stock has been one of the strongest names in the entire metal bag. So definitely one that can be counted on. And the next targets that we're looking out for is 1120 levels for Hindalco, and 1050 would be an important support to watch out.
That's the important, picks coming in from Shivangi. But now we are joined in by Vineet Bolinka, Head of Research at Ventura Securities. Good afternoon, Vineet. And I really like your T-shirt from the Hard Rock Cafe. It's pretty interesting and fun. But just wanted to understand, the overall space, there is still uncertainty in the markets. Is it a good time to look at, some defensives, especially in the FMCG pharma pack, or is there anything else which is wonderful here?
So I think the FMCG and pharma pack are obviously the ones to go with, and they are the ones which are going to be quite defensive. I also like the the resources space. So stocks in the metals pack look very good. We think that they should do well. But apart from that, the view outside of these few sectors is quite disconcerting, and that is because of the oil price, which is now looking to be very jittery, and there are there are expectations that the slowdown will impact us very harshly.
Okay, so that's with regards to where, the way markets are right now. So beneath, in this kind of a market where you can say valuations to some extent have come off for a couple of sectors, and people are comparing as to COVID times where some did not miss the opportunity, some did miss the bus. Do you find any value anywhere, and if so, what would your recommendations be?
So I think obviously the renewable space looks very interesting, and the electrification space. So all these continuously look good for us. Defense is another very, very strong sector, and along with this also the shipping industry. So all these four major industries that I've spoken to you about look very, very interesting, and we think that there's a lot of room left in these to rally again.
Okay, so that's with regards to where Mascon Doc goes. In fact, if we could just quickly pull up all the sectoral indices in terms of where the sectoral heat map goes, because I want to see what's happening there. Metals, the top gaining there, commodities, oil and gas, infra, energy are the ones which are seeing some smart moves, but seeing pressure is IT, auto, and real estate to some extent. Shivangi, metals has been pretty hot over the last couple of days. There has been some buying interest that's coming in with regards to pharma as well. In fact, the Cipla con call is ongoing right now. If you have to look at any of these two sectors, metals or pharma, anything that you like?
My BTST did stem from the metal pack, which is Hindalco. So definitely metal is one space which will be interesting to watch out. The other stock in this radar, in this space, which is on my radar, is the Hindustan Copper. This one is giving a fresh breakout on the daily frame with excellent volumes from the last two trading sessions. So this one's definitely on radar. From the pharma space, definitely one of my favorite picks would be Laurus Labs. We've seen that this has been one of the most resilient names in the entire pack, of course, in the diagnostic pack, if we extend the pharma space. And there has been excellent amount of long build-up that is seen from the last 7 trading sessions. So definitely after the breakout, we've seen follow-up is quite strong here. So these are the stocks that I'm looking out for in these couple of sectors.
Right. But moving on from stocks is a very interesting take, and everyone is looking at it this week. Trump says, Ni hao, China. Yes, you're right. The entire brigade of course, the president and his group of CEOs from US are on their way to China. But why is this important? Let's talk about that. This is the first visit to China by a US president in nearly a decade. Secondly, the Iran war trade looms over trade talks. Of course, there is expectations for both of these segments. Apart from this, also, let's look at what are the key other factors to look out for in this Trump and Xi Jinping meeting as well. The focus is largely on the trade deals or a strategic tie-up, and AI and Taiwan. That is where the expectations would be there, especially on the AI trade. Apart from this, also, the lot of CEOs accompanying him in the plane itself. It's called Air Force One. We have NVIDIA's Jensen Huang, Tesla's Elon Musk, we have Tim Cook, and also a lot of other CXOs coming in, from BlackRock, Blackstone, Boeing, you name it. And literally you could say that the entire S&P 500 might be there inside the Air Force One. Look at Goldman Sachs, Micron, Qualcomm. These are the names, and more CEOs are coming in. So he has taken an entire group of the CEOs. Remember, before going, he has given 2 important statements. First is President Xi will give me a big fat hug. That's what he has stated. And interestingly, he has stated that relatively the relation is good, and there will be a discussion on Iran as well. Importantly, this is important for India perspective also, but there's a fragile tariff truce with China. If that improves, that is sentimentally negative for India. They may help in the US-Iran ceasefire if any development happens. China is Iran's biggest oil customer as well. So these are some key factors you should be watching out for. And US recently actually sanctioned several Chinese companies, and the Chinese officials have also publicly called for stability. So eventually after this meet, something positive happens. But what's there for India here seems slightly negative here. Potential US-China G2 trade deal could be a little bit of adverse if compared with India's impact. But nevertheless, if the sentiments improve, this may aid the Iran-US ceasefire as well. So that becomes positive for India. So this is the entire picture of Trump going to China.
Okay, Trump going to China is going to be interesting. Thank you, Sharad, for that. An interesting take coming in there. But let's just very quickly look at markets as well. We are off the day's highest levels. Let's pull up Nifty 50 as well as Bank Nifty on the screens as well. There you go. We are now below that 23,450 mark on Nifty 50 as well. Let's pull up Bank Nifty and then we'll see what's happening there. We're almost inching towards the day's lowest levels, but that cuts off around. You have Bank Nifty, which has actually turned negative as we speak. So there is something which is happening so far. Let's look at the broader markets. We were at the day's highs when we started off the session. There you go. Again, we're trying to inch lower. They're giving up those gains, 0.7% higher still in terms of mid cap, 150, and in terms of small cap, 250 as well. There has been that profit booking that has started to come in. Sharad, it's interesting to see how we are giving up the gains as well in these last 10 to 15 minutes of trade.
We had pointed out earlier that there was a scope, and yes, now from that important levels of resistance, all of the indices are falling.
So sustainability is becoming a key right now. So that's key. But just very quickly, your coal gasification scheme for 37,500 crores has been approved by the cabinet as well. That's coming in from the cabinet briefing, on the back of which you have a Coal India that is in focus as well. Let's just pull up a Coal India and see what's happening. There you go. I mean, that stock is at the day's lows. But moving on. A host of Q4 earnings are lined up today. Let's start with the telecom major Bharti Airtel. Somit here with us to discuss the key expectations. The stock is doing pretty well. Somit, what is the expectation?
Well, a muted quarter is what is expected from Bharti Airtel in the fourth quarter. Now, if you look at the revenue, EBITDA and net EBITDA, they're expected to be up anywhere between 1 to 3% Margins are expected to come in at close to 58.1%, while the net profit number would be 16% higher on a sequential basis. Now, the key numbers that one should watch out for when Bharti Airtel reports, it's the India mobile business. Their EBITDA and revenue are expected to be up just 1%. Subscriber base is expected to come in at close to 37.2 crore as against 36.9 crore in the previous quarter, while the ARPU, that is expected to be largely flat. Now, ARPU is largely flat on a sequential basis, also because in the fourth quarter we had 2 less number of days as compared to the third quarter, and that's the reason the ARPU number is flat. But overall, it's a subdued quarter for the India mobile business, the enterprise business, and also the DTH business. It's the mobile broadband segment, the only home broadband segment that will see a strong growth on a sequential basis on the back of subscriber addition and ARPU stabilization. Apart from that, Airtel Africa has already reported its numbers, and it was a strong set of numbers, and Bharti Airtel owns close to 62.7% stake in Airtel Africa. So some positive rub-off effect of that could come into the consolidated books. Apart from that, the key things to watch out for from the earnings would be how, or the announcement that will be coming in on how they're looking to reorganize their shareholding in the Africa business. Apart from that, what are their plans for tariff hikes? What is the capital expenditure outlay for FY27? Would be the key things to watch out for from Bharti Airtel numbers.
Okay, thank you for that, Somit. We'll take a quick question with Puneet, but before that, MSP for Kharif for 26-27 has been approved at 2.6 lakh crores. The Sarkej Dholera semi-high-speed double line, the number that has come in for approval is 20,665 crores, and upgradation of the Nagpur International Airport has also been approved along with coal gasification. So these are the 3 announcements that are coming in. We will quickly wait for a cabinet briefing on the same. But beneath your view, when it comes to Bharti Airtel, because the stock has not really done too much in the last 1 year, people are awaiting tariff hike as well, but who will bell the cat is the question over here from between a Jio, Vodafone as well as a Bharti Airtel. How are you looking at the telecom space?
So, more than Bharti Airtel and Jio, I think we are looking at Idea Vodafone. My take simply out here is the fact that, the Kumaramangalam Birla is already on board, number one. Number two is that, their AGR dues have been resolved, and they're on anvil to raise money, which is going to kick off their capital capex plans. And this capex essentially warrants that, its fundamentals are going to improve significantly. So I think there could be a big upside emanating out here compared to the other 2 stocks. And hence, I think my dark horse would be Idea Vodafone out here.
Okay, so that's with regards to Vodafone Idea, goes as well as the overall telecom space. And Vodafone Idea has been in focus as well, Sharad, all these days because of a Bloomberg copy saying that there could be fund infusion on the back of the stake sale. Lots happening there. Let's quickly cut in across to INB Minister Ashwini Vaishnav addressing media about the latest cabinet decision.
बड़ा फैसला लिया गया है कोल गैसिफिकेशन का। आज हम सब जानते हैं कि गैस का जितना रिक्वायरमेंट है और दुनिया भर में जिस तरह की जियोपॉलिटिकल सिचुएशन है, उस हिसाब से हम आत्मनिर्भर कैसे बने। भारत में प्रचुर मात्रा में कोयला उपलब्ध है। करीब करीब अगर देखें तो आगे के 200 साल के लिए जितना कोयला चाहिए उतना भारत में ऑलरेडी उपलब्ध है। तो उस कोयले का उपयोग करके क्या हम गैस बना सकते हैं, इस विषय पे एक अच्छा प्रयास चल रहा था। उसका आज फैसला लिया गया है और बहुत ही सामयिक फैसला है, बहुत ही टाइमली फैसला है। कोल गैसिफिकेशन की स्कीम, कोल गैसिफिकेशन के लिए पहले ये पिक्चर देखना चाहिए हमें। कोल को हम प्रिपेयर करते हैं प्रॉपर, उसको क्रश करने के बाद में उसकी थोड़ी सीविंग होती है, प्रॉपरली उसको प्रिपेयर करते हैं। प्रिपेयर करके इसकी एक फर्नेस होती है कोल गैसिफिकेशन की। इस कोल गैसिफिकेशन की फर्नेस में कोल को डालने से और बहुत हाई टेम्परेचर पे 1000 to 1500 डिग्री और 30 बार हाई प्रेशर और हाई टेम्परेचर पे जब कोल को हम फर्नेस के अंदर डालते हैं तो फिर वो कोयला जलता नहीं है, एक गैसियस स्टेट में कन्वर्ट हो जाता है। उसका केमिकल कॉम्पोजिशन चेंज हो जाता है और बेसिकली कोयला माने कार्बन, हाइड्रोजन, सल्फर, ये सब उसके अंदर एलिमेंट्स डिफरेंट स्ट्रक्चर में होते हैं। तो उसको गैस उसमें सीधी सिंथेसिस गैस बन के निकलती है, जिसको शॉर्ट में सिन गैस बोलते हैं। सिंथेसिस गैस जिसमें कार्बन मोनोऑक्साइड होती है और हाइड्रोजन होता है। CO और H2 का रेशियो जैसा हमारा आगे का रिक्वायरमेंट होगा उसके हिसाब से हम उसको मॉडिफाई कर सकते हैं। तो ये जो सिन गैस है, इस सिन गैस को नेचुरल गैस के कंपेरेबल यूज में लिया जा सकता है। नेचुरल गैस को जैसे हम PNG, LNG ऐसे बोलते हैं ना, वैसे इसमें सिन गैस को SNG भी बोलते हैं, सिंथेसिस नेचुरल गैस, ऐसा मतलब शॉर्ट फॉर्म समझो आप, SNG। और इस गैस से आगे उस गैस को जला के पावर भी प्रोड्यूस कर सकते हैं, उस गैस से LPG का इक्विवेलेंट फॉर्म भी बना सकते हैं, और उस गैस से हम फर्टिलाइजर का मैन्युफैक्चरिंग हो, कई सारे जो पेट्रोकेमिकल्स के माने जो एक रिफाइनरी में बाय प्रोडक्ट्स होते हैं, उसी तरह के बाय प्रोडक्ट्स यहाँ पर भी निकाले जा सकते हैं। कई तरह के बाय प्रोडक्ट्स इसमें से निकलते हैं जिनका उपयोग फिर पेट्रोकेमिकल इंडस्ट्री की तरह इसमें भी उपयोग होता है। तो एक तरीके से कोयले से गैस, गैस से फर्टिलाइजर, कोयले से गैस, गैस से पावर, कोयले से गैस, गैस से कई तरह के केमिकल्स, ये बनाने की ये प्रोसेस है। और ये बहुत बड़ा आज का फैसला है, क्योंकि इस युग में हमें जितना आत्मनिर्भर बने उतना अच्छा है और उतना ही देश के लिए भविष्य का एक ये बड़ा इंश्योरेंस बनता है। कोल भारत में करीब करीब 400 बिलियन टन के नॉन रिजर्व्स है, 400 बिलियन टन के नॉन रिजर्व्स है। बहुत बड़ा रिजर्व, हमारा साल का करीब 1 बिलियन टन का है, 1 बिलियन टन का कंजम्पशन है, 1 बिलियन टन का कंजम्पशन है। तो अगर हम सीधा ही देखें तो 400 साल का हमारे पास कोयला ऑलरेडी मौजूद है। तो जब इतना कोयला मौजूद है तो इस कोयले का ज़्यादा से ज़्यादा उपयोग करके हम इससे गैस बना सकें, और गैस का उपयोग फिर फर्टिलाइज़र वगैरह में, ताकि फर्टिलाइज़र के लिए जो LNG इंपोर्ट करनी पड़ती है वो कम हो जाएगी, उसकी रिक्वायरमेंट एक तरीके से कम हो जाएगी। इस स्कीम का आज जो बेसिकली कोल में 2 तरह की गैस होती है। एक गैस होती है अंदर मीथेन, मतलब कोयले का जहाँ पे डिपॉजिट्स होते हैं अंदर गहराई में मीथेन के रिजर्वॉयर्स होते हैं, तो वहां से मीथेन निकाली जा सकती है ड्रिल करके। और दूसरा तरीका है कोल को गैस में कन्वर्ट करने।
Well, that's an interesting take coming on the coal gasification projects, and of course a lot of companies are there also in this.
A lot of them, because we've just been looking at Coal India, but from a GAIL to a BHEL, L&T,
Adani
RCF,
Enterprises.
Adani Enterprises, all of them. Let's just pull up all of them one by one on the screens if we can very quickly to see, because these do benefit to some extent or the other. You have Adani Enterprises at the nearly at the day, I mean slightly off the day size, but still seeing gains of nearly 4%. Coal India we've spoken about, GAIL, BHEL, a few of the other names also who could be beneficiaries. RCF is another one that you should be watching out for. BHEL also seeing some smart moves. Let's put up our RCF on the screens. That counter also trading in the positive. So these are beneficiaries when you talk about coal gasification. But it's interesting to see how the markets have come off from the day's highs. We've given up those gains. We are now closing towards that 23,400 mark. When we started off,
it was 100 point down.
Exactly. So we are 100 points down from where we started off. India market close. Marginal gains of 0.1% is what you're seeing. Bank Nifty, in fact, has already turned into the negative on a closing basis today. So this is going to be somewhere a little bit concerning. And your mid cap and the small cap index have also given up your opening gains in today's session. So categorically, there was a short covering rally, and now you're seeing some bit of profit booking that's coming in.
And let's just pull out the Nifty indices of the stocks. You know, how are the performance happening in the Nifty? Of course, we had seen a good green, and it's still maintaining. It's not that bad, but if the sell-off that intensified a bit, if you look at the Infosys, M&M, Eicher Motors, and the top gainers, of course, Adani group of stocks are doing well. Asian Paints also, we're seeing almost gains of almost 5% in the trade.
Absolutely. Let's pull up, very quickly your VIX and the advanced decline ratio and see if anything changes on the advanced decline ratio along with the VIX, because that will tell you of the story in terms of what's happening in the markets. Your advanced decline ratio, in fact, there you go. We were talking about stability when we started off the show, and now that gap has narrowed. Your declines have actually widened. We started off with 500 declines from the day. It's actually doubled to almost 1,000 declines. So there is that selling pressure which has come in. If you see in terms of India VIX as well, let's look at that one. If you look at India VIX, there you go, 19.3. That has been slightly stable enough. 18 to 19 was the kind of range that we were penciling in today's session. And very quickly in terms of your NSE 500 stocks as well, if that has remained, because I'm sure the gains would have been given up. I mean, SAIL, Dixon, Mishra Dhatu, Ease My Trip, Vodafone, these are the ones which were seeing some smart gains, but the cuts have deepened further. Torrent Power, Sun TV, Jindal, eClerx, Cohance Life are few of the top losers today.
Right.
But categorically, if you see in terms of markets, it seems there is that tug of war that has continued over the last couple of trading sessions in terms of markets right now. I mean, there is no particular direction that you can see. Either you're seeing a sell on rise or a buy on dips kind of a strategy on every single day, which keeps alternating, is what I would say.
And the global cues is also something to watch out for this week. Trump and Xi Jinping's meeting comes up. Rupee hit its record low levels. A lot of things are happening.
And the FI selling that continues.
Exactly.
So lots brewing. But that's what we are at the end of India market close on NDTV Profit. Lots more lined up. A thank you from Sharad, the team that put the show together, and myself. Please stay tuned. You have Market Express next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm NIIT Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is a show that gets you a snapshot of everything that is happening in trade today. Let's also take a very quick look at the markets on that note then. Markets extended their recovery today with benchmarks ending firmly in the green. The Nifty reclaimed the 23,400 mark, while broader markets moved in step with the benchmarks as well, signaling improving sentiment across the board. Meanwhile, let's also talk about markets showing a mixed sectoral picture. So that's what it was looking like at close. So metals and oil and gas stocks, in fact, led the gains, lending support to the benchmarks. In contrast, you did have IT and auto stocks that remained a little bit under pressure, capping broader upside. Let's also talk about gold and silver that is set to turn costlier at this point in time, and that's after India hikes import duties with immediate effect. Basic customs duties doubled to 10%, while cess is raised to 5%, taking the effective import tax to around 15% from 6% earlier. The move raises input costs for jewelers and could dampen near-term demand, with jewelry stocks now firmly in focus. Let's also move on and talk about how India has raised duties on gold and silver imports. The country's trade agreement with the UAE comes under sharp focus as well with this. And gold imports from the UAE surged dramatically after the pact, jumping from under $3 billion before the deal to over $16 billion in just 3 years. Let's also talk about lower tariffs under a quota system that make the UAE a key supplier, even as India looks to rein its growing gold import bill. Let's also talk about Cipla that reported a mixed set of numbers for the March quarter. You're looking at the revenue coming in largely in line with expectations, profitability taking a hit as margins contract sharply as well. Weaknesses in the US business is something that you saw really reflecting through here, higher costs as well as lower other income. Those were a couple of other drags as well. When you talk about the fourth quarter's numbers, that said, strong growth in the India and Africa business also offer a little bit of support at this point in time, even as pressure really persists on the overall margin profile.
Meanwhile, Vodafone Idea's board meet on May 16 to consider a possible fundraise, and looks like third time's going to be a charm even as it prepares to announce March quarter results. This is the third time that they're going to be mulling a fundraise, in fact, in recent years, while several options remain on the table at this point in time. The street remains cautious given that you do have Vodafone Idea's weak operating performance that you're looking at, add to that heavy debt burden and the long road to a sustainable turnaround. Let's also talk about Tex Macro Rail that has secured a major international order worth about $430 million or about 4,000 crores thereabout from a particular brand, Logistics and Barbary brand as well. And you're talking about this particular order involving the supply of over 2,200 freight wagons along with 30 diesel locomotives as well. Execution is planned between 2027 and 2028 with a proposed 15-year maintenance partnership. The deal strengthens Tex Macro's global expansion push and also deepens its footprint in the African rail ecosystem. Moving on then, let's talk about Dixon Tech that surged in trade after posting fourth quarter results. While the revenue saw a little bit of modest growth coming in, profitability was under pressure with margins slipping and net profit falling sharply on a year-on-year basis. The absence of last year's exceptional gains, that's also something that weighed on the earnings here as well. Now, when you talk about management commentary also coming in, they flagged steady demand in non-mobile segments and remain optimistic on some of the growth drivers going forward, including the Vivo partnership and new capacity additions. Moving on then, let's talk about Torrent Power reporting a weak set of numbers for the March quarter. Profits coming under sharp pressure as well, and renewable energy growth, that's something that supported operating performance. Higher interest and depreciation costs also weighed heavily when it comes to the earnings. Lower gains from investments as well as a drag from the generation business is something that you're looking at that really hurt the bottom line, even as margins see a marginal uptick here. Let's also talk about MTAR Tech that reported an inline set of numbers for the March quarter, supported by strong revenue growth across key segments. However, operating performance falls short of street expectations as higher raw material costs push expenses higher. Despite near-term margin pressures, the company remains confident of sustaining growth backed by rising demand from high-growth sectors and a healthy order outlook. Alright, then move on. Let's also talk about Berger Paints that's in focus on the back of delivering a strong set of numbers in the March quarter. Now, that's largely driven by healthy volume growth across segments. And you're looking at margins really improving on a better product mix and operating leverage, while profit gets an added boost as well when you talk about the insurance claim booked during the quarter really showing through here. When you talk about the robust momentum, you're seeing that coming across for construction, chemicals and waterproofing, further supporting the overall performance. Moving on then, let's talk about HPCL that delivered a solid operational beat. Look at that 5.5% uptick coming in on this particular counter as well, and earnings improving sharply on a sequential basis. When you talk about the fine print as well here, while standalone revenue was largely flat on a quarter-on-quarter basis, you did have about 1.14 lakh crore EBITDA in terms of that jump also coming in 28% to somewhere close to 9,000 crore rupees as well. Margins also expanded meaningfully. So that's something that you're looking at here as well. And even when you talk about profit after tax, you're looking at that also rising over 20% on a sequential basis as well. And the improvement largely is coming in from stronger operating performance, and that's even as revenue stayed rather muted, helping the company beat street expectations on the earnings in the March quarter. Let's also talk about TVS Motor that's posted a strong set of numbers on a year-on-year basis in the fourth quarter, driven by robust revenue growth. Now, when you talk about the revenue, you're looking at a 34% thereabout rise coming in. EBITDA increasing to about 26%. EBITDA margins moderating to 13.1% compared with 13.9% last year, largely due to that high base also reflecting through. And on a normalized basis as well, you're looking at the EBITDA margin that stood at somewhere close to 12.5% in the fourth quarter. So you're looking at 60 basis points for the margin expansion, give or take. And when you talk about net profit, that's also risen about 31%, reflecting that sustained operating momentum that you're seeing. Of course, the stock was trading under pressure despite all of this. Let's also move on and talk about Power Finance Corporation that reported a mixed set of numbers in the fourth quarter. Calculated NII declined 10.5% on a year-on-year basis to somewhere close to 10,800 crores, while the total income that slipped about 1.5% as well. And asset quality, however, has provided support as the company reported impairment reversals of 794 crore in the quarter compared with impairments last year. Now, this aided profitability with net profit rising 10.8% on a year-on-year basis. PFC, in fact, has also recommended a final dividend of 3.95 rupees per share, offering a steady payout despite pressure when it comes to core income. Let's also move on and talk about Kirloskar Brothers. That's reported a mixed set of numbers, and you did have the stock also trading with a downtick of about 5.5%. Revenue rose about 10.4%. On a year-on-year basis, profitability is the one that you saw remaining under pressure yet again, and EBITDA also declined somewhere close to 3.9%. And the margins, they have also compressed, in fact, sharply to 12.9% from 14.8% thereabout a year ago. When you talk about the net profit as well, that's fallen about 18.7% on a year-on-year basis as well, and despite higher one-time gains of 26 crore during the quarter. The company has announced a dividend of 7 rupees per share, even as margin pressure really weighed on overall performance. Let's also move on and talk about Sagility, that reported a mixed set of numbers for the March quarter. And the stock, of course, not taking any cues from that, because you do have the margins that had come under pressure as costs rise faster, largely due to that one-time bonus payout, while higher taxes hit the bottom line. So revenue edges up just a little bit, supported by the payer vertical and client additions that remained healthy. And when you talk about near-term pressure, that's something that the company is also ending the year with strong growth despite that, and a sharply improved balance sheet. Moving on then, let's talk about Sharda Cropchem, that delivered a strong set of numbers. Look at that 3.5% gain also coming in for this particular counter. And in terms of the factors why this has happened, you're looking at sharp margin expansion in the fourth quarter. When you talk about the net profit as well, a surge of close to 56.5% on a year-on-year basis to somewhere close to 300 crore rupees, and the revenue has risen about 12.9% as well. Even when you talk about the operating performance, that stood out. You do have the EBITDA that's jumped about 60.7%, and EBITDA margins as well. You've seen an expansion coming in, a meaningful one at that, with that 23.6% that compares with 16.6% a year ago. When you talk about tax expenses, you're looking at an increase to about 103 crore from 53 crore last year, tracking higher profitability as well. So you do have overall margin-led earnings that you're looking at, and that's something that had the stock also gaining about 3.5%. Let's also talk about Paras Defense, that reported a strong set of consolidated results for the March quarter. Failed to impress the street though, but you did look at that robust top-line growth coming in. So the revenue has surged about 58.5% thereabout on a year-on-year basis. EBITDA has risen about 50.6%. Net profit jumped somewhere close to 74.3% as well, reflecting that operating leverage really reflecting through. And the EBITDA margin, that's the one that's moderated just a little bit, 24.9% versus 26.1%. Now, overall, you're looking at strong growth across revenue and profits that define this particular quarter's performance, and that's despite that minor margin compression that you had showing through. Let's also move on and get you some business news. RBI Governor Sanjay Malhotra has warned that domestic fuel prices could rise if global crude oil prices remain elevated for a prolonged period of time. Speaking amid ongoing geopolitical tensions in the Middle East, Malhotra said that the current spike in oil prices poses upside risks when it comes to inflation and could eventually feed into retail fuel costs in India as well. And he's also noting that while oil marketing companies and the government have so far absorbed some of that pressure, really sustained high crude prices may make price hikes unavoidable. Moving on then, let's also get you the word coming in from the Union Cabinet that has approved a massive 37,000 rupee crore incentive scheme for coal gasification aimed at reducing India's dependence when it comes to imported natural gas, as well as boosting cleaner coal-based technologies. The proposed plan is expected to support projects that convert coal into synthetic gas, chemicals, and other industrial feedstock. According to sources, the scheme could include viability gap funding and financial incentives to accelerate private and public sector participation. The move, in fact, aligns with India's broader energy security strategy. Moving on then, let's talk about Bitcoin, that is holding steady above the $81,000 mark, as well as strong demand continues to support the cryptocurrency market. In fact, according to market observers, you're looking at resilient buying really reflect through that really helped the leading crypto asset really maintain its levels despite global uncertainties. The broader crypto market is also showing signs of stability, with several major tokens recording modest gains as well. So analysts, in fact, are attributing the current resilience to sustained institutional interest and positive sentiment around potential regulatory clarity. Moving on then, let's talk about PM Modi has reportedly ordered a 50% reduction in the size of his official convoy. And this is as part of a broader austerity and fuel conservation push amid rising global energy prices linked to the Middle East crisis. Sources are saying that the Special Protection Group has been instructed to scale down the number of vehicles while maintaining all mandatory security protocols. The move is now being mirrored by several BJP-ruled states, union ministers, including Amit Shah, that are also said to be adopting similar measures as well. Moving on then, let's talk about Tamil Nadu Chief Minister Vijay as well, who's comfortably won the floor test in the state assembly. Now, he secured 144 votes, demonstrating strong support for his government. The floor test was conducted amid political developments in the state, and Vijay's victory, in fact, really confirms the majority backing of the ruling alliance in the assembly. The smooth passage of the confidence motion brings stability to the government right now and ends that ongoing speculation about political uncertainty in the state as well. And Uber is set to establish its first data center in India through a partnership with the Adani Group, marking a major step in localizing its digital infrastructure in one of its largest markets. In fact, according to reports, the facility will support Uber's growing needs around data storage, AI workloads, and cloud operations. The project is expected to come up within Adani's expanding data center ecosystem, which has become a major focus area for the conglomerate as well amid rising demand from AI and cloud companies. Moving on then, and onto some somber news. Pratik Yadav, the younger son of Samajwadi Party founder Mulayam Singh Yadav, passed away at the age of 38. The family has confirmed the news of his demise. Pratik was the younger brother of current Uttar Pradesh, of Akhilesh Yadav as well, and he had kept a relatively low profile compared to other family members in politics. The cause of death has not been officially disclosed as yet. Moving on then, let's talk about the United States and China that have wrapped up another round of high-level trade talks just ahead of President Donald Trump's visit to Beijing for a summit with Chinese President Xi Jinping as well. Negotiators led by U.S. Treasury Secretary Scott Bessent and Chinese Vice Premier are going to be holding discussions in South Korea aimed at stabilizing trade ties and preparing the ground for the Trump-Xi meeting. And the talks, of course, are coming at a sensitive moment in time with tensions around tariffs, semiconductors, rare earth exports, and Taiwan and the Iran conflict all expected to feature prominently when it comes to these discussions. Moving on then, let's talk about Iran's Foreign Minister Abbas Araghchi, who's sharply criticized the United States, accusing Washington of bad faith diplomacy and blocking a definitive end to the conflict. Speaking at a high-level meeting in Tehran with Norway's Deputy Foreign Minister, Araghchi said that the US approach remains arrogant, provocative, and untrustworthy. He blamed American military actions for worsening tensions, particularly around the Strait of Hormuz, and said that the lack of trust has stalled peace efforts. The remarks underscore deepening diplomatic strains even as the conflict drags on. Moving on then, US President Trump has bluntly played down the economic impact of the Iran conflict on American citizens, saying that financial concerns do not factor into his decision-making. Speaking before leaving for China as well, Trump has said that his sole focus is preventing Iran from acquiring nuclear weapons. He has insisted that national security outweighs inflation, energy costs, or market swings as well, noting that the stock market remains at record highs. And the remarks are coming amid political debate in Washington as lawmakers question the rising economic and fiscal costs of a prolonged conflict. US immigration authorities have flagged widespread misuse of the optional practical training program, identifying around 10,000 foreign students, including Indians, linked to highly suspect employers. ICE says that the opt route, which allows students to work and transition to H-1B visas, has increasingly become a magnet for fraud as well, and officials are warning that investigations have uncovered cases ranging from visa and employment fraud to intellectual property theft as well, and national security risks. That's also something that you're looking at, that's raising fresh scrutiny, in fact, around student visa pathways. And on to some sports news then. Indian shuttlers PV Sindhu and Kidambi Srikanth have advanced to the second round of the Thailand Open with convincing opening round wins. Two-time Olympic medalist Sindhu defeated Thailand's player as well in straight games, showing strong control and improved movement on the court. Meanwhile, former world number one Srikanth continued his solid run of form with a comfortable victory over Malaysia's player. The wins come as Indian badminton looks for momentum ahead of a packed international calendar this year. And as we wrap up Market Express, a late-night rescue operation in Chhattisgarh has disrupted a trafficking network targeting one of India's most vulnerable tribal groups. While the rescue of 13 Baiga children is a significant victory, the other story lies in the coordination behind it. By linking police enforcement with NGO intelligence, the state has demonstrated a working model for the child protection ecosystem. Let's take a look.
In the Kabir Dham district of Chhattisgarh, a coordinated effort has led to the rescue of 13 children from the Baiga tribal community. These children, aged 8 to 15, had been missing from their homes for nearly 8 months, trapped in a cycle of bonded labor and exploitation. The operation began after Association of Voluntary Action, or AVA, an NGO partner of Just Rights for Children, alerted police about information they had received regarding children allegedly being forced to work like bonded laborers. Acting on the information, police teams led by Superintendent of Police Dharmendra Singh launched late-night raids in Chhattisgarh's Kavardha, about 110 kilometers from the capital Raipur. During the first raid, 4 frightened children were rescued, and what they told officials led to an even bigger breakthrough.
उनसे जब बातचीत की गई प्यारपूर्वक तो उन्होंने बताया कि साहब आपने हमें तो बचा लिया, लेकिन मेरे गांव के और भी बहुत सारे बच्चे यहाँ पर बदवा मजदूरी कर रहे हैं। उनकी निशानदेही में बाकी जगह जब छापामारी कार्रवाई की गई तो टोटल 13 बच्चे हम लोगों ने बरामद की पुलिस के साथ।
During counseling, officials discovered that all 13 children belong to the Baiga tribe, one of India's particularly vulnerable tribal groups. The children told counselors they were made to work from morning till night and were paid just ₹1,000 to ₹2,000 per month. Police arrested 10 traffickers and have now registered cases under trafficking, bonded labor, child protection and child labor laws.
अगर इस प्रकार की और भी किसी की कोई गतिविधि में पाया जाता है उसके विरुद्ध भी सख्त कार्रवाई करेंगे, और किसी भी प्रकार की कोई किसी को सूचना मिलती है तो मुझे या हमारी पुलिस को या जरूर बताएं या इस संस्था को बताएं, जिससे कि हम उन बच्चों तक पहुंच सकें और उनका सहयोग कर सकें.
But for child rights groups, rescue is only the first step. Rehabilitation, education and reintegration are just as critical.
जिन 13 बच्चों को बाल कल्याण समिति के समक्ष जीआरसी आवा और चाइल्डलाइन की संयुक्त टीम ने प्रस्तुत किया, उन सारे बच्चों को शिक्षा से जोड़ने के लिए शिक्षा विभाग, डीएम और श्रम विभाग को संबंधित विभागों को निर्देशित किया गया है ताकि बच्चों का समुचित विकास हो सके. बच्चों के रेस्क्यू और पुनर्वास की प्रक्रिया में जीआरसी पार्टनर और आवा की महत्वपूर्ण भूमिका रही.
Across India, organizations within the Just Rights for Children network say trafficking, child labor and child marriages are often deeply interconnected, trapping vulnerable children in cycles of exploitation. And that is why this case serves as a blueprint of what can be achieved when a vigilant community, an informed civil society and a responsive police force work as a single unit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm NIIT Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel.
Big decision by centre. Government hikes the import duties on gold and silver from 6% to 15% after PM Modi's appeal to avoid gold purchases for a year amid current geopolitical tensions. Jewellery makers trade under pressure after government hikes the import duties on gold and silver. Stocks of Kalyan Jewellers, Senco Gold Titan fell up to 5% today. Rupee hits a new record low of 95 rupees 81 paise against the dollar after a volatile day of trade. The Indian currency ends the day at 95 rupees 71 paise versus dollar. Benchmark indices snap a 4-day losing streak, managing to end just above the flat line. Nifty fails to hold 23,500 level, even as majority sectors advanced, with Nifty Metal eyeing a fresh record high. Oil prices remain high as hope fades for US-Iran peace deal. Brent crude hovers over $107 a barrel. Trump repeats war threats against Iran again. Cabinet approves coal gasification incentive scheme for 37,500 crore rupees amid the geopolitical tensions. Boosts PSU diversification into chemicals, menthol and fertilizer feedstock. Air India trims select international routes between June-August amid airspace curbs and soaring jet fuel, yet sustains scale with over 1,200 flights monthly across key markets. Prime Minister Narendra Modi orders 50% cut in his convoy size, calls for more EVs in austerity and fuel-saving push. BJP leaders follow suit, including Home Minister Amit Shah. NIIT Aayog also pulls the plug on offline events. Vijay's TVK government comfortably wins the floor test in Tamil Nadu Assembly. Vijay gets support from 144 MLAs. DMK abstained, staged walkout from Assembly. US President Donald Trump heads to Beijing for high-stakes talks with President Xi Jinping, his first visit since 2017. Trump says there are a lot of things to discuss, adding Iran is very much under control, even as trade talks narrow to limited economic deals. Hello and welcome. You've tuned into Profit 360. I'm Nisha Podar. Let's take you through all the top headlines and the key developments of the day. Well, days after Prime Minister Narendra Modi, remember, urged the citizens to avoid buying gold for a year. Well, the government has raised the effective import duty on gold and silver from 6% to 15%. Effective immediately, gold now will attract 10% basic customs duty and 5% agriculture, infrastructure and development cess. This is not just a tax tweak, it is a macroeconomic signal aimed at saving dollars, cooling gold demand and also protecting India's foreign exchange reserves at a time of global stress due to the ongoing Iran war. We in fact spoke to some of the industry voices on this move, and here's a supportive comment made by Shivankar Sen, MD and CEO of Senco Gold. He called this move as the need of the hour. Listen in.
The steps the government has taken, I think it's the need of the hour. And the industry is with the government in whichever ways possible so that the current account deficit could be controlled and the rupee can be made stronger. So short term, we understand that this increase in duty will lead to certain outcomes. One is that consumers will go for lighter weight jewelry. There will be about 10 to 15% decrease in terms of volume consumption, and that would directly lead on to lower imports for India.
All right, so that's the word coming in from the industry on this bold move by the government. Let's now get in my colleague Mahima to really explain the intricate details of this duty hike, from information on India's gold import data to the potential impact on jewelry stocks. Let's understand it all. Mahima, please tell us.
Right. So, just to give a background as to what's happened, right? So earlier in 2024, July 2024, the budget had reversed this duty structure. They'd taken it back to around 6%, both the basic custom duty and cess combined. But that has now again been reversed. So there's a Uno reverse play here, where now we're looking at basic custom duty at 10%, cess at 5%, and that takes the effective overall import duty at that 15% mark overall on import of gold and silver both. Additionally, jewelry findings will attract a duty of around 5%. Platinum findings will attract a duty of around 5.4%. And concessional duty provisions for import of catalyst or ash containing precious metals will also attract a duty of around 4.4%. Plus, on top of that, concessional duty with regards to UAE imports will also be taken into consideration, and there will be duty hikes there as well. So that's point number one. Now, in terms of how this overall impacts companies. But before that, it's important to take a look at the gold import data as well, because overall, in the past couple of years, the gold import data has been rising both on account of value as well as volume. As far as FY26 goes, the overall estimated increase is around 24% in terms of value, but volume slightly, where FY25 goes, the downtick was around 4%. But India is the second largest consumer of gold imports after China, and we consume all the gold that we import. So that's why this becomes very important. Now, how this impacts jewelry companies as a whole is because, one, raw material cost will become expensive for them. So that means they'll have to keep more working capital, pay more interest on that. On top of that, demand could, see some subduing because purchasers could kind of delay their purchase because of this hike in duty. And lastly, in terms of where margins go, companies might not be able to pass on the full price hikes to the consumer, and that is why their margins will get impacted. And on the back of that, a lot of stocks remain in focus. All your jewelry names, from Titan, Kalyan, Senco to Thangama, LPC Jewelers, etc., get impacted on the back of this. But then on the flip side, you have something like a Deccan Gold, which is doing fairly well because it's a minor and it benefits from this price increase. So this is the overall view of what's happened and its multiple impact on the economy as well as stocks.
All right. Thanks so much, Mahima, for that. Now, while these measures are clearly taken to support the rupee and reduce pressure on our import bill, this is going to really tighten the screw on gold jewelers. In fact, NDTV Profit visited Asia's oldest bullion market in Chandni Chowk, Delhi, to capture the reaction of the jewelers on the ground. And also, we realized that many of them really worry about the impact the demand slowdown would really have on their daily income. Take a look at this report.
And right now, NDTV Profit is reporting from Kucha Majni in Chandni Chowk, which is one of the Asia's largest and oldest bullion market. And joining me are a few members of the Bullion Traders Association. Sir, हमने देखा है कि PM मोदी ने बोला है पिछले संडे की हमको गोल्ड नहीं लेना चाहिए, और आज जो जिस तरह से रेट्स इंपोर्ट पे रेट्स बढ़े हैं, उसका कितना इम्पैक्ट अपने धंधे पे देख रहे हैं?
देखिए, कल तक तो यही था कि हम भी कह रहे थे मोदी जी से कि भाई आपकी अपील करी आपने तो हम इसको गौर फरमाएंगे और करेंगे। और कल से हम परसों से बल्कि हम बयान यही दे रहे हैं और सबको पब्लिक को भी यही कह रहे हैं कि भाई मोदी जी ने बोला है तो गोल्ड को मत खरीदो।
जिस हिसाब से ट्रेड होता था उसमें अब कितना बदलाव आया है, खासकर मतलब पिछले कुछ दिनों में, और खासकर 2 महीनों से जब से ये ईरान में वॉर स्टार्ट हुई है?
देखिए, बदलाव का तो ये कह सकते हैं कि काम रह गया 25%, और 25% में भी हमें हर भाव में बेचने में नुकसान है। आज अगर हम 100 ग्राम सोना भी बेचते हैं तो वो हमसे लिया नहीं जाता, क्योंकि लेते लेते में भाव बढ़ जाते हैं। फिर भी मैं ये कहूँगा, मोदी जी जैसे जो भी कर रहे हैं वो शायद फॉरेन रिजर्व बचाने के लिए ही कर रहे हैं।
आप क्या सरकार से रिक्वेस्ट करना चाहेंगे कि आपकी स्थिति से
ज्वेलरी इंडस्ट्री को राहत पैकेज देना चाहिए,
थोड़ी सी ड्यूटी रिड्यूस करनी चाहिए, थोड़ा काम का फ्लो बढ़ेगा, थोड़ा कस्टमर का आना जाना होगा तो भी थोड़ा ठीक रहेगा। जीएसटी भी दे रहे हैं, उसको इतनी ड्यूटी भी देनी पड़ रही है, सब कुछ हो रहा है, काम बहुत ही हल्का हो गया पहले से।
We are seeing that because of this import duty hike, they're expecting that while they might be having a lot of stock with them, but they hardly are finding any new buyers for this.
All right, demand to slow down because of the higher prices. We also spoke to consumers and jewelry shop owners at Mumbai's Zaveri Bazaar, where jewelers are really warning of a sharp hit to footfalls, while buyers say the demand may not drop despite the higher prices. Let's listen into their reactions.
History has shown us that increase in custom duty is not a deterrent to buy gold. People in India are mad after gold, and gold is the only investment right now which has given excellent returns on buying gold. So that is not a deterrent. Only thing is that we feel the trade will go into the wrong hands because of high custom duty. Only smuggling will increase, and that will not be a very good deterrent to import golds. When the PM sir announced that 1 year you don't have to buy gold, since then we are seeing no footfalls at all in their stores, So people have really greeted the call well, PM sir's call well.
प्रधानमंत्री ने तो बोला है सोना 1 साल तक नहीं खरीदी करना चाहिए, पर घर में फंक्शन होने के कारण कुछ ना कुछ थोड़ा सोना तो लेना पड़ता है, तो आज मैं सेट और बैंगल्स देखने आई।
So we are wasting a lot of money on gold. Somehow we are, from yesterday as the Modi has announced, we have also insisting the customer not to buy a bullion, buy just the gold for your purpose of the occasion or what the function is there.
It's now time to also understand the thinking of the government behind increasing the import duty. As per sources, the move primarily aims at conserving the forex amid the West Asia uncertainty. My colleague Shrimi joins in with all the details.
In fact, 5 reasons which has been given by the top government sources on the fact that why they have increased the import prices. And the number one is conserving the foreign exchange. That's very, very crucial. And they are underlining the fact that because of the gold import, there's a massive outflow of forex, and they are trying to curb this while increasing the import duty on all the precious metal, including yellow metal, that is gold. The second important point which they are giving, that already high crude prices along with shipping disruption already causing and widening your current account deficit, and adding on to gold will, making this entire maths of current account deficit more concerning. So this step is taken. The third important point, which is again very crucial, government at this point of time seeing the gold import as very discretionary in nature, non-essential commodities, and that is why this curb is put in place to sort of discourage people to spend on gold. So that's third point. And more important, that government at this point, with the prolonged West Asia crisis, wanted to have a balanced approach. So this is not something that they're trying to ban, purchase or ban import, but they are trying to sort of discourage to have a more balanced approach as far as macroeconomic stability is concerned, and to maintain the economic resilience.
All right. Thank you so much, Shrimi, for getting all those details. Now, despite the measures taken by the government on gold and silver imports, rupee continues to be under pressure. It's a new record low of 95 rupees 81 paise against the dollar. After a volatile day of trade, the Indian currency ends the day at 95 rupees 71 paise versus the dollar. As part of our discussion today on the duty hike, we also spoke to Gaura Sengupta, the chief economist at IDFC First Bank. Listen in to what she had to say about more measures are really required to arrest the fall of rupee.
It was required, it was also expected that they will do something on the gold front. Among all the imports, that's the one which it is the least productive in a way, but yes, the gold sector does get adversely impacted. It is a labor intensive sector, but still, it was a required measure. For example, in FY26, the major pressure on the CAD was due to gold imports. Overall, FY26 CAD was very small at 0.9% of GDP because we had good services surplus, we had good remittances inflows. So that balanced the pickup that we actually saw in the gold imports. How effective this is in terms of reducing the volume of imports is yet to be seen, because gold, at least the volume, tends to be less price sensitive. In FY26, if you look at it, we saw more than a 50% rise in prices, and the volume of gold imports contracted by only 10%.
All right. Despite a volatile session, the benchmark indices in the equity markets managed to end in the green with a late recovery from the day's lows. Now, the Nifty reclaimed the 23,400 mark at close, while the Sensex ended just around 50 points higher, as selective buying really helped the markets recover the lost ground. So the broader markets, they also saw a mixed trend through the session amid the cautious global cues and stock-specific action. For a complete wrap of all the market action and key movers, let's take it across to my colleague Parth. Parth, tell us.
So Nifty has ended its 4-day losing streak today by closing around 0.1% in positive and finally finishing above the 23,400 mark. Asian Paints and Adani Enterprises were the top gainers in Nifty, both of which were up by over 4% today. If we talk about the broader market, then it has outperformed the benchmark today with Nifty Midcap 150 snapping its 3-day losing streak by gaining over 0.6%, which was led by Steel Authority of India, which has gained over 14% today, and Dixon Technologies, which was up by over 9% today. Moving on to Nifty Small Cap 250, which has also snapped its 2-day losing streak. It gained over 0.3%, which was led by IFCI and NMDC Steel, both of which were up by over 5.5% today. If we have a look at the sectors, then all the Nifty sectors have ended on a mixed note, with Nifty Metal being the best performing sector today, snapping its 3-day losing streak by gaining over 3%, which was led by Steel Authority of India, as we saw that it was up by over 14% today. On the other side, Nifty IT was the worst performing sector, falling for the third day in a row, down by over 1%, led by Coforge and LTM, both of which were down by over 1.5% today. If we have a look at the sectoral trends, then Nifty Auto, Nifty Realty, Nifty Bank and Nifty Financial Services have ended in red for the 4th consecutive day. Nifty PSU Bank has fallen for the 5th day in a row, while Nifty Oil and Gas has snapped its 4-day losing streak.
All right, Parth, thank you so much for all the details of the market action for the day. Now, in a major push towards energy security as well as import substitution, well, the Union Cabinet approves a massive 37,000 crore rupees incentive scheme to accelerate the coal gasification projects across the country. Now, the move is aimed at reducing India's dependence on imported LNG, urea, ammonia and methanol, while boosting the cleaner utilization of domestic coal reserves. Now, the proposed scheme, remember, will support the government's target of achieving 100 million tons of coal gasification capacity by the year 2030 and is also expected to benefit state-run coal companies by expanding the coal usage into the chemicals and industrial feedstock. In fact, let's listen in what Ashwini Vaishnav, the Union Cabinet Minister on the coal gasification push, he had to say. Listen in.
गैस का जितना रिक्वायरमेंट है और दुनिया भर में जिस तरह की जियोपॉलिटिकल सिचुएशन है, उस हिसाब से हम आत्मनिर्भर कैसे बने। भारत में प्रचुर मात्रा में कोयला उपलब्ध है। करीब अगर देखें तो आगे के 200 साल के लिए जितना कोयला चाहिए उतना भारत में ऑलरेडी उपलब्ध है। तो उस कोयले का उपयोग करके क्या हम गैस बना सकते हैं, इस विषय पे एक अच्छा प्रयास चल रहा था। उसका आज फैसला लिया गया है और बहुत ही सामयिक फैसला है, बहुत ही टाइमली फैसला है, कोल गैसिफिकेशन की स्कीम।
Now, Air India reduces the flights on select international routes between June and August, citing persistent airspace restrictions and also record high jet fuel prices that are really hurting the commercial viability. In fact, the airline will trim the frequencies across key routes. Europe and Australia see the sharp reductions coming in. My colleague Danish Anand shares all the details on this development. Danish, tell us.
Well, that's correct. First of all, I would like to tell you that on 6th of May, NDTV Profit reported that Air India is planning to cut over 500 international flights this summer. And today, Air India has confirmed that. And they have said that Air India every month will be now operating over 1,200 international flights. As per the details which we had earlier, we could clearly see that Air India has reduced its international flights by 20% in the month of May. And same are the plans for June and July as well. So today, officially, Air India has announced that certain flights to North America, like for example, certain flights to Vancouver, the frequency has been reduced. Similarly, certain flights to the west coast of the USA, those have been curtailed. But Air India has also increased certain frequencies to other parts of USA. Besides that, Air India has also recalibrated its European flights, and similar trend is also visible even for the other parts of Southeast Asia. And as far as the passenger accommodation is concerned, Air India in a statement has said that all the passengers whose flights have been cancelled, they have been well informed in advance, and in order to accommodate them, firstly Air India will try to accommodate them on certain Air India flights. They will be trying to create certain more connections. So besides that, if they're unable to accommodate those passengers, then certain passengers could also be accommodated on flights with other codeshare partners. Besides that, if the passenger is not satisfied, then he or she is fully liable to offer full refund. And the reason why we are seeing this is the fact that the jet fuel prices, the ATF crack has widened over the past 2 months, and even the ATF for international flights operations is also above $1,000 per kiloliter. So these are the few factors why Air India has recalibrated its network for this summer.
Right, Danish, thank you so much. Anyways, the government has said you have to curtail the international visits. Thank you so much for all the details. Now, the centre's austerity push is now visibly moving from messaging to action. Prime Minister Narendra Modi has directed the SPG to cut the size of its convoy by nearly half, while also encouraging the use of electric vehicles in official fleets wherever feasible. Following Prime Minister Modi's appeal, Union Home Minister Amit Shah also downsized his convoy to less than half, followed by other ministers. In fact, NIIT Aayog has really cut down physical events to reduce the fuel consumption. All right, and while all these austerity measures as well as curtailment on foreign travels is really taking place, ixigo CEO Alok Bajpai noted a distinct shift in the Indian travel landscape today, highlighted a growing trend of travel substitution instead of international breaks. So the public has increasingly shifted towards domestic vacations to avoid geopolitical uncertainty. Let's listen in.
Of course, Middle East travel was already somewhat impacted from March, but we also saw substitution starting to happen in March itself, right, where some people started to look at domestic breaks instead of international breaks. So that substitution is what we expect will accelerate. For ixigo, we've always been a lot more domestic focused with our strong, rail and bus businesses, and so that substitution over time, should be helpful to us, is what we believe. And we have also entered the hotels category recently, where we've started off with a smaller market share, and that continues to grow. So I don't foresee any short-term sort of impact that is negative for the industry, because domestic is still the mainstay for most companies.
All right, moving on to some big earnings and Nifty 50 earnings of the day. Pharma major Cipla announced a weak Q4 numbers with revenues declining 3%, but the management is looking to evolve beyond its traditional image as a respiratory focused giant as it charts a new course for global growth. Now, Managing Director and Global CEO Achin Gupta of Cipla highlighted that while the company really maintained its undisputed leadership in the respiratory segment, well, the next phase would be driven by a much broader portfolio. Listen in.
Investors historically viewed Cipla as a respiratory-led company. Now, is the next phase of growth likely to come from peptides, differentiated products, and consumer health?
Yes, I think we do maintain our leadership on respiratory, but we've also done a lot of work on cardiovascular, on diabetes. We recently launched an inhaled insulin in India, and we've launched several peptide products, including 2 that we've launched in the US in the last couple of months. So we will broad base the offerings because in light of how the medicines are, our portfolio will start reflecting the growing opportunities.
Ride-hailing giant Uber has really partnered with Adani Group to set up its first data center in India, marking a major step in expanding its technology and innovation footprint in the country. Uber CEO Dara really announced the development after meeting Gautam Adani in Ahmedabad, saying the facility will help Uber test and deploy technology solutions at scale from India. For the world, the data center is expected to be operational later this year and also comes amid India's growing push to position itself as a global AI and digital infrastructure hub. All right, Tamil Nadu Chief Minister C. Joseph Vijay has won trust vote in Assembly. 144 MLAs voted in favor of Vijay, while 22 voted against him and 5 MLAs abstained from voting. Now, Vijay's allies, Congress, VCK, Left, IUML have really extended support to TVK, while one axed AMMK MLA also backed to Vijay. Now, 4 PMK MLAs and lone BJP MLA abstained from voting. Meanwhile, AIADMK has really split into 2 over the support to TVK. 25 AIADMK MLAs have really backed to Vijay, and on the other hand, all DMK MLAs walked out of the assembly and did not participate in the voting process. All right, US President Donald Trump will be in China from May 13 to 15 to meet his Chinese counterpart Xi Jinping. Now, tech leaders like Elon Musk and Tim Cook are accompanying him, with trade, AI and Taiwan all set to be discussed in this high-profile meeting. Sharad, my colleague, is here to share what's on the agenda and why all eyes are on this big meeting. Sharad.
Trump says ni hao, China. Yes, you're right. The entire brigade of course, the president and his group of CEOs from US are on their way to China. But why is this important? Let's talk about that. This is the first visit to China by a US president in nearly a decade. Secondly, the Iran war trade looms over trade talks. Of course, there is expectations for both of these segments. Apart from this, also, let's look at what are the key other factors to look out for in this Trump and Xi Jinping meeting as well. The focus is largely on the trade deals or a strategic tie-up, and AI and Taiwan. That is where the expectations would be there, especially on the AI trade. Apart from this, also, the lot of CEOs accompanying him in the plane itself. It's called Air Force One. We have NVIDIA's Jensen Huang, Tesla's Elon Musk, we have Tim Cook, and also a lot of other CXOs coming in, from BlackRock, Blackstone, Boeing, you name it. And literally, you could say that the entire S&P 500 might be there inside the Air Force One. Look at Goldman Sachs, Micron, Qualcomm. These are the names, and more CEOs are coming in. So he has taken an entire group of the CEOs. Remember, before going, he has given 2 important statements. First is President Xi will give me a big fat hug. That's what he has stated. And interestingly, he has stated that relatively the relation is good, and there will be a discussion on Iran as well. Importantly, this is important for India perspective also, but there's a fragile tariff truce with China. If that improves, that is sentimentally negative for India. They may help in the US-Iran ceasefire if any development happens. China is Iran's biggest oil customer as well. So these are some key factors you should be watching out for. And US recently actually sanctioned several Chinese companies, and the Chinese officials have also publicly called for stability. So eventually, after this meet, something positive happens. But what's there for India here? Seems slightly negative here. Potential US-China G2 trade deal could be a little bit of adverse if compared with India's impact. But nevertheless, if the sentiments improve, this may aid the Iran-US ceasefire as well. So that becomes positive for India. So this is the entire picture of Trump going to China.
All right, thanks, Sharad, for that. A big development there. With that, completely out of time on this edition of Profit 360. Thanks so much for tuning in.
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, and this is a very interesting show where we get you interesting companies, and right now the flavor is earnings season. So definitely we have got a company whose numbers have been very strong, but I'm not going to give you the name of the company so fast. Try to guess it. This is a Bengaluru based kitchen solutions company, and largely if you are in South India, these products are already there in your kitchen. They benefit from the shortage of LPG in the cooking space. That means the demand of these cooking induction cookers, that is where the strength is lying, and that's why the stock was buzzing last 2 months. Very strong numbers, obvious it is. And interestingly, from the March lows, the stock has also gone up. It's gone up more than 30%, almost, because it's almost 24 to 30% right now, and doing well in trade as well. But what's the company name? I'm sure there'll be 3-4 companies which you'll try to guess, but the company in focus is Stovecraft. This is the company which we are talking about. But why the interest is there? Why are we getting this company in KYC? That's the important question to be asked. Some questions are there. Let's see what are these questions. First one is definitely going to be on a strong Q4. The electric cooktop, that demand has gone up. LPG crisis हो रहा है, electricity का requirement है. वो cookers की बात करें तो यहाँ पे cooktop में request is coming in. FY26 revenue growth was 11%. That fell short of 15%. So we'll try to understand from the management where did the overall impact happen, and well, it fell short. The confidence of intact of 15 to 18% revenue growth and 40 to 45% gross margins. This is the plans for the next 2 to 3 years. Will the management change this stance or will it remain the same? That's the important question to be asked. Also, the aluminium, copper and currency movements, it impacts a lot. Now, will we see that in Q1 or H1 FY27? That's the main question to be asked. That's something we will focus on. Apart from that, the IKEA announcement, there was a partnership announcement last quarter. How are they expanding it? What will be the benefits coming in? And the incremental portion, of course. Apart from this, the expanding presence through the entry into the hob segment, that's something to look out for. And also, we'll be asking about the appliance business. Now, they want to go bit more than what the cookware segment is, and so we'll try to understand the strategy of how this product mix changes. Also, the export business, any major headwinds is coming in. We know that the tariff of the US has been corrected from 50 to 15%, or is there some problems to it? But to give all the solutions, we have the management, Rajendra Gandhi, the MD and the founder of this company, Stovecraft, where he'll answer all of our queries and any concerns which is there for the investors, that will also be addressed. Also, let's look at the entire story of this company, Stovecraft. What this company is all about and what are its key products. There are some brands also to look out for. As usual, I had mentioned you earlier, it's a Bengaluru-based kitchen solutions, and company calls itself Emerging Home Solutions brand. Remember, the company is moving towards the high margin segment. The home and kitchen appliances, pressure cooker, freestanding hobs and non-stick cookware. These are the key products which the company is having. Also, the two brands are there. I'm sure the Pigeon brand and Gilma brand, these are the brands of, these cooking utensils and these products which might be there in your homes, and this is how the company is known as. Also, they proposed to commence the manufacturing of the home and kitchen solutions, and this will be coming under the Black Plus Decker brand. So this is also the third brand from this house. Apart from this, looking at the numbers, the backward integration manufacturing facilities, there are two of them. One is in Baddi, one is in Bengaluru. That is something to watch out for. And also they're having 329 stores operational in 22 states and 151 cities of India. So definitely they are expanding offline more. But let's see how the channel-wise distribution looks like. Roughly the general trade, that's almost 32% and a modern trade also having a 34%. But the company is trying for an omni-channel growth, and that's why we have e-commerce, own retail, OEMs and others as well. This is the entire picture of how they are channelizing their sales. But how the volume growth has been, that is something to look out for, and there are different sectors. The induction volume growth, of course the base was lower, but the demand which was there because of the LPG crisis, look at that number, it's around 67%. When it comes to non-stick and cooker, it is there, it's around 23 to 40%. And interestingly, the appliances, these are the smaller appliances, that has also shot up almost 98% of volume growth. But of course, some concerns are there, especially on the gas cooktops. That's where the demand is pretty less in terms of the volume growth. Apart from this, let's see the revenue breakup, how things are looking like. Small appliances, no matter it is called small, but is having the largest revenue contribution of 40% here. Apart from that, if you look at it, around 22% comes in for the pressure cookers and the remaining segments as well. But let's point out the positive triggers for you. The first one is the return ratio and working capital. They are improving. Second one is, of course, on the debt portion. The debt reduction is continuing, and that's what is aiding a good momentum to the balance sheet analysis, and we'll get you that in some time. Strong demand for electrical products, especially due to the LPG crisis, and that is where the perception of the stock has changed. But nevertheless, the revenue contribution is still not very high also. And interestingly, for last 2 years, the domestic institutions have been increasing the stake, and that is where the interest comes in. It had an IPO, there were 2-3 big high ups and lows, but after that we are seeing DI is lapping up. But there are some negative triggers also. Not everything is rosy, and that's why our job in KYC is to get you all the entire 360-degree analysis on it. The export still getting impacted on the trade issues, that's of course there. Also, the geopolitical issues may keep the pressure on the costing front. No matter how much backward integrated you are, there will be rising costs, and of course it's going to impact every one of us and all types of companies. Valuations are still remaining on the higher side. So is there any value emerging? I don't think so. I will get you those numbers to prove it. And slower growth is coming in the gas cooktop and the non-stickware segment. These are the two segments. Decently there is 16 to 20% revenue contribution. So this is the entire picture for Stovecraft. But how do we judge a company in KYC? Let me show you the KYC ratings. There are 8 of these ratings which we track. Of course, we include income statement, balance sheet, cash flow, and also for you we get you the return ratios for this company. We will compare the ROC and the ROE numbers. यहाँ पे शेयर होल्डिंग रहेगा, FIs, DIs और प्रमोटर की स्टेक के बारे में हम बात करेंगे. And then there is street cred as well, valuations, where we compare that with its peers, and there are 3-4 interesting peers where we'll try to understand whether the stock is cheap or not, and of course the outlook, what are the numbers and triggers going ahead for the company. But let's start the first rating, that's the income statement. And largely the income statement, top line growth has not been that attractive. The EBITDA numbers have increased, the 3-year CAGRs has been pretty decent, but of course the street is wanting more. Ye dil mange more. Whatever you do in business, those numbers should be reflected here, and it's not showing so much of it. However, the Q4 numbers, they have done really well, and this is where the interest came for me also to track this company and maybe try to see whether any alpha can be made for you or not. Largely the net profit, the EBITDA, this is where the jump has come in, and it has been a stable, good jump coming in their key product lines as well. Let's look at how the margin profile is also functioning, and margin profile also has gone up and it's sustaining, and that's a good portion. It's around 10% odd. But as and more they go into appliances, as and more they go into value added, as and more they're going to export, the margin profile changes, and hopefully this can go up to the 12 to 14% margins. But we definitely will ask this outlook. So net Q4 numbers were strong, margin is good, but if historically speaking the numbers haven't come in as yet, so I'll give a neutral rating right now, and we need to figure out more couple of quarters to judge that. Let's look at balance sheet, and I mentioned to you earlier about the fall in debt, and this is where the borrowing, it's literally not there. So that is where the strength lies. Most of the debt reduction ratios have come down, and because of that we might expect in future a little bit of rating upgrades as well. And when that rating upgrade happens, the borrowing profile changes for a company, and it sets up a very positive momentum for the stock. So net balance sheet is pretty strong, cash balance is decent, so I'll give a strong thumbs up when it comes to the balance sheet. So we spoke about the income statement, we spoke about the balance sheet. Now let's talk about cash flows. How has that improved or not? From last 2 years we'll be getting this data. Of course, some aberrations were there in FY25, but let's see overall net currently for FY26 how things stand. Cash flow from operations has improved. The conversion which is there, that has also improved, and overall The net cash flows, this of course includes operating, investing and financing, all of them has also improved. So net Stovecraft is doing well and on cash flows as well. So cash flows and balance sheet has been really strong. Income statement, I would say neutral right now, but let's look at the other parameters also to judge the return ratios, how things have managed. And of course, we have given you the quarterly breakup. The ROC numbers were on a decent 15%. A slight pressure has come in, and this has been coming in at around 12 to 13%, but not a major shock, to be honest. It's maintaining its trajectory, that 12 to 15% mark. Margins also, we saw that. Let's just pull up the ROE numbers to show you how things are moving. And over here also a little bit of a minor pullback is there on the positive side for the ROE as well. Around 8.5 to 9 is the average, and it's still falling in that. But yes, from the third quarter to fourth quarter on a sequential basis, there has been an improvement in both ROC and ROE numbers. So I'm going to give this still a neutral rating when it comes to this overall analysis. Let's talk about the shareholding, how things are moving. And shareholding, the promoter stake में कुछ बदलाव आया नहीं है. 56% था मार्च 2024 में, और अभी भी देखें March 26, 56%. Now, interesting thing is FIs have not increased their stake at all. It's been flat as a pancake. But DIs on the other hand have been lapping 3%, 7%, and now 8%. So the institutional interest is definitely there, if not FI participating. So I'm going to give this a strong thumbs up only on DIs lapping up their stake in the shareholding segment. But apart from shareholding, let's talk about street cred. Has the stock actually made money? That's the big question to be asked. At the end of the day, if the stock doesn't make money for you, then it becomes a concern. 2025 high, the stock is still in a correction mode. It's down 29%. But from the March lows, where we saw most of the mid cap, small caps going up, and there was a rally, especially on the LPG crisis front, which was there, and the benefit immediately company getting that, and that is where company got March lows. The stock went up 24%. But if you're holding the stock for 1 year, you're sitting at a loss of 11%. And if you're holding it for 5 years, there hasn't been much return, just 13%, almost you could say flattish. So yes, for medium term, long term investors, the stock has given a very big, patience exercise. But because of that, I'm going to give this a negative rating for street cred. Let's pull up the valuations to see, is there any value left? And I doubt it's going to be there. Stovecraft is on the expensive side along with TTK Prestige. One is at 46 times, one is at 51 times the 12-month trailing P. If you have the competitors, it's on the lower side. We have Hawkins Cookers and we have Butterfly Gandhimati as well. That's around 20 to 31 times. So definitely both of them are quite expensive. And Street is still concerned that the valuations are not that attractive, at least for the entry. That's what the analysts tell me. So it's a negative rating when it comes to the peer comparison. Valuations are not that attractive. But let's talk about the outlook. What is there in the outlook? First of all, the company is expecting almost a 15 to 18% growth. याद रखिए ये 2 से 3 साल वाला long term view है. Generally outlook, most of our analysis in KYC happens on long term whenever you're analyzing it. Now this aims to expand the gross margins to 40 to 45% over the next 2 to 3 years. That's something which we'll be watching out for. But of course in short term, महंगाई भी तो है. There's a strong demand for electrical cooking. We might see that demand pushing in the second quarter or the first quarter of FY27 as well. And the expanding presence through entry into hob segment. Now how big this segment is, what's the benefit looking like, we'll try to understand from the management, and aiming for the appliances business eventually surpassing the cookware. That's what I was explaining you on these numbers. So net, this is important outlook, but I'll still give this a neutral rating right now when it comes to Stovecraft. लेकिन आते हैं, let's explain you total KYC ratings, what's there for Stovecraft, and you should of course understand what is the reason for it. Income statement is largely neutral, even though Q4 numbers were strong. Balance sheet, the debt reduction is something which I liked. The cash flows has improved, and that is why we have given a strong thumbs up to them. Return ratios, it's been very, very plain, straight, in a very range bound, but nevertheless, it's a stable business model. Shareholding, the DIs have been lapping up, but concern definitely is the returns haven't come in for the investors for this stock. That's why I've given this a thumbs down. Valuations are still on the expensive side if you get TTK Prestige also on this side, because these stocks have run up. Outlook, it's neutral, decent enough on the growth perspective, but yes, there are some headwinds that can definitely come in from exports, tariffs, or even the costing. That is where things are getting expensive. It's not only impacting this company, it's impacting the entire sector and a lot of other ancillary industries. But let's give the final rating for the stock. It's roughly 4.5 out of it, largely neutral number, which we give generally in the KYC segment. So definitely we'll try to understand from the company, and we are joined in by Rajendra Gandhi, the managing director at Stovecraft. Good afternoon, Rajendra ji. Sharad here, and a very strong set of numbers coming in from Stovecraft. Of course, there is an angle to the electrical cooktop and the electrical related appliances demand going up. But what else led to this growth in these numbers? And do you think this demand will get pushed to in the first quarter or the second quarter also of this financial year?
Yeah, good afternoon. Yeah, the last quarter was quite good on demand side, and we continue to see demand continuing both for cooking appliances and for our pressure cookers.
Right, and this demand is going to continue in the first quarter and second quarter also. जो demand चौथे तिमाही में दिखा, first and second quarter, will it get pushed?
There seems to be an change in adaptation to moving to cooking appliances, electrical cooking appliances. So either to what Indian households or kitchens were only depending on LPG gas, there are also some as a backup are adding induction cooktop and other cooking appliances like the rice cooker, air fryers and OTGs. But we are also seeing this becoming a primary cooking appliance for many households. So we believe that with a large country like and so many households in the country, there is a huge opportunity ahead for cooking appliances.
Right, and Rajendra ji, just look at the FY26. You had guided for a 15% uptick in revenue. I calculated it comes to 11%. Have we lagged somewhere because of this?
Yeah, there was a initial period of the year. First 2 quarters, there was a lag in our export orders. It was there was a drop in export business because of disruption in tariffs, but that is now past. We are seeing exports back to normal. With that, I think we are back on our expectations on growth, and with that added demand on electrical cooking appliances, we believe this the growth we are on the growth numbers that we anticipate to.
Right, and Rajendra ji, another question is that means that 15 to 18% revenue growth and that margin expansion to 40 to 45% over next 2 to 3 years. So this guidance, will you stick by it, or you would like to change it a little bit here there?
No, we are confident of the growth. We have worked on our cost. Of course, again, the last quarter, there was one-off items like huge forex loss, there was huge volatility and the depreciation of the rupee, which led to some drop in expected margins. But we are confident of the gross margins being around 40%.
Right, and just to give a perspective, there's a backward integration at play also for most of your plants. That's where it tries to offset. But the question remains is aluminium का भाव बढ़ा है, copper का भाव बढ़ा है, currency adjustments is there. Of course, you do hedging and forex adjustments also. Any impact in the immediate term, next couple of quarters maybe?
Yeah, definitely this currency is a worrying thing. Otherwise, we have addressed the market volatility on commodities. We have passed on the cost increase in this current quarter to adjust it for our spread margins. The volatility on forex, we are trying our best to manage it. That is the only ambiguity that we are living with. Otherwise, I think we are in control of our costs.
Right. So currency is something which everybody is looking out for. But apart from that, the IKEA partnership which was announced earlier, the street wants to know a little bit more about it. By when these incremental benefits will start coming in, and what will that be?
Both IKEA and Stovecraft have invested on building this capability, and now we are ready. We will start seeing revenue from this quarter.
Okay, so from first quarter onwards, we'll start seeing the revenue from IKEA as well. Okay, that's a pretty interesting way to look at that. But apart from that, the hob segment, That is where the company is pushing hard. What is this segment? How big is this market? And what kind of a market share gain are you targeting in this hob segment?
So it's actually a chimney and hob. And either we were importing this, we have set up our own manufacturing facility for this, and there is a very high adaptation of this chimney in every kitchen in the Indian households, and we believe that is an appliance of the current and future. We are very confident of doing well in this segment also.
Okay, but any quantification, any numbers for this?
All these new product additions, our export, the growth in demand for electric appliances gives us a high optimism on our expectations to grow between that 15 to 20%.
Yeah, that 15 to 20% comes in. But there was a major, strategic outlook going ahead is now the company wants to aim for the appliances business more to eventually surpass the cookware segment. Now just explain us, and of course this might be a bit theoretical, but we need it for our audience. How different is the appliance business when you compare it with cookware business? What are the return profiles? What are the important, pros and cons? If you could just explain that to my audience.
For us, we are both channel and product agnostic on margins, irrespective of the categories that we are in. It is only divided between domestic and export business. Export business is a more of a white labeling business for us. Gross margins are a little lower than our brand business. Otherwise, between the cookware segment and the appliances segment, we are agnostic on the margins. We price our products in a way to achieve our aspired EBITDA margins. So on the margin side, these are neutral, but we are seeing good growth with more and more manufacturing, in-house manufacturing of these appliances, which were, as a country, we were more importing these appliances. Today, a majority, maybe closer to 97% of the products that we sell from the Stovecraft on our Stovecraft P&L are all manufactured within the facilities of Stovecraft. So that gives us the power to address supply chain challenges, cost challenges, and continuous innovation. All this is leading to higher growth in our cooking appliances.
All right. Also, a little bit of this minor technical error, but definitely the management has said a very important thing. आप अगर compare करते हैं आपके cookware business or appliance business, the margins remain same, and export is largely white labeling. Rajendra ji, on the export front only, I want a question on that. What are your export in terms of total revenue, and the tariff which is there, that impact which is there from US? How is the company taking it? If you could just explain us that.
The tariff disruption is a past. We are in line with Southeast Asian countries. We are neither having an advantage or a disadvantage on tariff. So our business is back on track. About 12% of our business used to be export, but it is growing now, growing faster than the company's growth rate. So we believe this will continue to grow now.
Right. And final thoughts, Rajendra ji, on the competition in the industry, and I'm talking about the domestic markets, your view on that.
Like I said, the appliances business is growing, and the advantage the company has over competition is we have continuously invested on manufacturing it within our facilities. So this has given us that added advantage of being a company that manufactures and having the distribution and various distribution channels to address the consumer needs and a growing brand. All this within one company is giving us that huge advantage. We definitely have an advantage on innovation because we manufacture these products. So that is giving us advantage. There is a growth in this segment.
Right, Rajendra ji, that is a very important. I had purposely kept this question for the last to understand कि आपका company दूसरों से कितना अलग है, and that's how you have answered. Thank you, sir, to taking out your time and giving the views for the company and the outlook ahead as well. It's always a pleasure to talk with you. So very interesting management from Stovecraft, and of course LPG crisis is there, and that's where the momentum has come in, but the stock has not rewarded the shareholders on a long-term basis. And if some positive outlook comes for FY27, maybe then alpha can be created in the current valuations for the company. For interesting stories like this, stay tuned to NDTV Profit and keep watching KYC.
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Everyone sees a house. I see decisions. Why this location? Why this timing? Why this buyer? Some properties make headlines. Others quietly change lives forever. I break down every detail. Purpose, profitability, potential. I travel where ambition lives, meeting the people who turned a purchase into their greatest decision. Same house, different outcomes. Why it worked for them? Why it didn't for others? Hi, I'm Vishal Bhargav, and I'll be meeting homeowners to explore their purchase journey. Catch me, The Habitat, only on NDTV Profit.
He has been tracking market.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. The last couple of sessions for the equity markets have been chop and churn. And in fact, for the last 3 or 4 sessions, you've seen lost ground. But if you zoom out and you look from the end of March to the end of April, then there's been a quite substantial rebound from the cuts that you saw in the Indian equity markets. And the good thing is that SIP flows, even in the month of April, were pretty robust. So in March, they were at an all-time high. And in April, they came in at about 31,115 crore rupees. The tendency, though, is to think that everything looks good, everything looks okay, when there has been a substantial bounce back. And certain issues get ignored. So we're going to preempt that, and we're going to try and get you to look at your portfolio and judge the strength and possible problems and head them off. I'm joined today by Aditya Agarwal, who's the co-founder of Wealthy.in. Aditya, thanks so much for taking the time. I think a lot of people will have looked at their returns at the end of April and possibly even now, despite the recent slide, and would be feeling significantly better about their portfolios than they would have in the month of March. But that may be a bit of a fallacy. Would you agree?
Thanks, Alex. Always a pleasure to be here. No, it's, I would not say it's a fallacy, because it's always good to, get that confidence back in Indian market. But yeah, I think you're right in saying that we might sometimes, doubt our choices when, markets go through a difficult time. And then, at times when there's a sharp rebound, we actually end up making bad choices again. So actually these times when we go through a volatility, which is, we saw 10-11% correction, and then in a single month, a few indexes, we saw 10 to 12%, rebound. I think such times are a great time to actually evaluate yourself as an investor, that what were your real emotions when you went through that seesaw? Because that is when you truly know yourself that, okay, what kind of investor you are.
Interesting. Okay, so that's, and by the way, in case you missed it, the index level up move that Aditya is referring to for the small cap index, for example, in the month of April itself, it went up by 17%. For the mid cap index, it went up by 13%. And in the recent past as well, you've actually seen resilience in the broader markets, more so than the large cap counters that are being sold into. So that's probably also reflective in your portfolio. But what should investors be wary of, and how should they review their SIP portfolio after a rebound like this, Aditya?
Right. So again, I will refer to, because it's a lot about behavior, and I'll come to data part as well. But when you were sitting on, let's say, a small cap SIP in your portfolio for 2 years, and you maybe either saw flat or probably negative returns. And at some point during that 2-year period, you said, enough is enough, I'm pausing it. Right. But then, came April and you saw 15-17% move, and you certainly jumped to either restart your SIPs or to add a lump sum to your SIP small cap portfolio. I think that is probably the first thing that you should review about your behavior. Because, we go through these cycles of, what is now called as FOMO and JOMO, where sometimes we are fearful of missing out. We are okay with that. And sometimes we obviously have that joy of missing out. Right. So while March, you probably had that joy of missing out of correction. But, in April, when suddenly index saw that kind of up move, you probably felt that, okay, and am I missing out on something? So I think that is probably the first thing to review. And it's actually, I would not even say that you need a lot of data. You know yourself that, okay, what is it that you felt like when, people were going through that? And of course, we can talk about, why not just rebound, but, April is a great time to review your portfolio. You should do that every year as a process. And again, what I have seen personally through when we look at client portfolios, when we have client conversations, is that a lot of investors get into this habit of collecting flavor of the season, right? For example, in 2024, we saw 200 plus NFO launches, right? And whichever, was your preference, you ended up sort of investing in it. And if today your portfolio if your core has become thematic, then that's a problem that you should definitely review. Right. If your is, just because of whatever was the flavor of the season, you ended up collecting it and your core is certainly a thematic, I think that is like a big red flag. And especially when we go through these, volatile times, for you to review the first thing in your portfolio.
When I look at the flows data, and the most recent flows data came just this week, I'm talking about the Association of Mutual Funds in India, the AMFI data. If I look at actively managed equity mutual funds, I see inflows of 38,000 crore rupees on a net basis. And I find it very heartening, Aditya, to see that over 10,000 crore rupees has gone into your flexi cap funds, and a pretty substantial amount also going into multi-cap funds. So the diversified funds are finding favor. So therefore, I hope that that issue that you've pointed out with regard to the tendency to move towards your concentrated bets have dissipated somewhat. But having said that, there is also a significant possibility that there is portfolio overlap that gets built into a portfolio overall. How do you ensure that that gets removed in this kind of a review? And what is the risk that that can have in either a sharp up move or a sharp down move?
Right. So actually, you are right about that trend. In fact, that's the most heartening bit, that flexi cap has to be the fundamental block. And today, even though returns have not been great in last 12 months, 24 months, people are sticking to flexi caps. I think there is definitely a behavior change there. But in my view, or wherever we have analyzed portfolios, so I think real risk is not from having 3 flexi cap funds. Real risk is when, you have flexi cap funds, but you also have concentration in specific sectors or specific themes through factors, because we all know that, that every winners rotate, whether we talk about across capitalization or across sectors or across factors, winners rotate. So I think where the red sign, the immediate way to review a portfolio is, before even looking at portfolio overlap, we should first look at concentration. Is there any particular area where my portfolio is concentrated? And it's something that we can do very simply, that we can, look at underlying portfolio of each of the funds that we have. It is available on all AMC websites. And there again, one big thing that comes into picture is how many funds you have. Because if you have 25 funds in your portfolio, then it is very hard to do. Right. So as a thumb rule, we again say this, that if you have a medium-sized SIP portfolio, 4 to 5 funds is ideal. So probably the simplest thing you can do even to begin your portfolio is to see how many funds do you really have. If you have more than 10 funds, then you clearly will have a challenge in even analyzing the overlap and concentration risks. So even before you get there, you have to first sort of figure out, okay, which are my 5 core funds which form part of my portfolio.
That's a good point. And so therefore, to bite the bullet, Aditya, in certain situations, people have started SIPs, like you said, a lot of NFOs came through, right? They've had a bad experience over the course of 1 year. Would you say that you should bite the bullet? If you're making losses as well, book those losses and consolidate. This is the time to do that, because hopefully the war situation ends at some point in the next few months, hopefully, and the focus comes back onto the Indian fundamentals, and once again you see an up move. Now is the time to fix issues.
War situation will definitely end at some point, right, Alex? We all know, but of course it will cause some pain. It is already causing some pain. Now again, let's say, so it again depends on what percentage of your portfolio is sitting into that fund. Let's say if I have a consumption, I love consumption as a theme, and let's say my 10% of my SIP is going to consumption-oriented fund, and it's something which is linked to my 10-year horizon of a particular goal, then I'm absolutely fine with it. But on the other hand, I was actually, there are cases we have seen portfolios where people have bought into defense funds like, there's no tomorrow, just like how we collect stocks or how we collect memorabilia. So if you have, let's say, 30% of your money going into defense funds across 5 different funds, that's a clear sign that you need to bite the bullet and need to either consolidate those holdings or actually at least prune down some of that. So again, it's a very, I think the compass always remains the same, Alex, as we always discuss, is that, what are your goals? And for each goal, what is the right allocation? And then at the same time, you should not be chasing recent returns, because that is where the biggest bias comes in fund selection.
So let me ask you this, right? And this is not necessarily a one size fit all. You're talking about a very simple approach. And let's face it, simple approaches are often the best approaches. There's a reason why Occam's razor as a concept is a great concept, and medical professionals around the world know this. The simplest solution is often the best solution. But let's talk about this, right? So if you're saying 5 or 6 funds for your SIP book, what should that comprise of? And maybe we can talk about drilling a little deeper into the allocations then after that.
Sure. So again, we have spoken about this before, but flexi cap is where you begin. And that's what, by the way, on our platform, we see FlexiCap is the number one choice for SIPs. Then after that, depending on, if you do equity only, then obviously you start from FlexiCap and you move to large and mid and small. So there a little bit of, your own risk profile comes into picture. And this rebound and fall is actually perfect time to assess your risk profile. Because, one great thing that has happened, Alex, is that we now have a 5 crore investor base and we have people now across cycles. So there are investors who have seen 2008 cycle, 13, 14, sluggishness, then 20 cycle, and now, last 1 year of sluggishness. So there are people actually, when we saw in our data as well, that there are people who are topping up onto their SIPs in, March when the markets were at the worst. But at the same time, there were customers who were sort of stopping their SIPs because, they have not been around in the market for so long. But in terms of core equity portfolio, you're sort of starting from FlexiCap, and then depending on your risk profile, either you build through large and mid and small. But if you are someone who has been around for some time and is, okay to take risk, then maybe mid and small and then large and mid. So that probably will be my, pick for equity allocation in that order as well.
Yeah, it's a good way to describe it. And of course, you can have fixed income allocation to round things off. You can have a multi-asset fund to have a little bit of commodity exposure, or you can have a gold ETF. Of course, bear in mind that gold ETFs have gone up quite considerably today on account of the customs duty increase. But Aditya, I think we've covered quite an important subject. Thank you so much for taking the time and for joining us today on Your Money Matters.
Thank you, Alex. Always a pleasure.
We've covered quite a bit of ground on what goes into your portfolio, right? So I'm just going to repeat it for you. FlexiCap funds for that diversified approach to investing. Then large and mid as a category is actually doing pretty well. So depending on your risk profile, what Aditya just spoke about, you can either go mid and small, or you can go large and mid, and then you can have a sort of allocation to the broader market funds as well. Now, bear in mind, depending on your risk profile, you will look at allocation in each of these. The reason it's important for you to judge this is because of what your experience will be. If you go towards a small cap fund, the possibility is that you will see more volatility. There is the possibility of a higher reward, but there is a higher degree of risk and there is a higher degree of volatility. So you might get 14-15% potentially even over a longer period of time, but at the cost of significant volatility during that time frame. So bear in mind, you need to identify not just where you want to reach, but how you want to reach it. Now, the next conversation that I have for you is an important one from a long-term perspective, and this is how you plan inheritance, how you plan transference of your assets or receipt of assets from people in your family. Swapnil Kothari, senior lawyer at the Supreme Court, is joining me to talk about this very important subject. Swapnil, thanks so much for taking the time. I want to break this up into a few categories. I want to talk about first, physical share certificates. You don't hear about them very often, but it's important to talk about this. So first, we'll talk about if you've, for example, opened an old cupboard and found share certificates, how do you ensure that you can transfer ownership? If you have dematerialized shares or mutual fund units, and third, if you have immovable property. So let's start with the first. You are possibly in receipt of a physical share certificate. How do you ensure that you can transfer ownership?
Well, first of all, what you need to do is you need to go to a bank and get that dematerialized. And if those are the banks that help you out in this, then please do that. And that's the first thing that you need to do. Then suppose you're dealing with an intestamentary succession aspect, meaning that there is your father or your mother did not leave a will, and you being the sole heir or the co-heir or whatever the case may be, and you find those shares and physical set of shares, and you try to get them dematerialized, as I said, and you apply for letters of administration, which is for a petition for letters of administration, and that you have to have an extra schedule. And in that schedule, every possible aspect of your property, whether movable, immovable, all of it should be there. Jewelry, shares, even if those are dematerialized, you have to mention what shares, which company, and what are the share numbers. And assuming that there is a locker which is unopened, say that locker number also. Even if there is a bank account of 50 rupees, say that as well. So include in the share schedule to the petition anything and everything that you think belongs to you. Because what happens is that if you want to go for an amendment of that schedule, that means you go for an amendment of the petition. That is going to take a bit of a time, and it's tedious and it's cumbersome. So you try to make sure that you include anything and everything to begin with. And the petition for letters of administration is in the case of intestamentary succession. Now, just to give a little bit of a background, Hindu Succession Act 1956 applies to Hindus, Buddhists, and Jains for intestamentary succession. Whereas the Indian Succession Act 1956 applies to Christians, Parsis, Jews, Hindus, Christians, Parsis, and Jews for testamentary and intestamentary, both. That is, when you have a will or when you don't have a will. But the Indian Succession Act also applies in case of where there is a will for Hindus, Buddhists, and Jains. So the Hindu Succession Act applies only when there is a case of intestamentary succession, meaning when there is no will left. So the point is that you follow the procedure that is laid down in either of these two acts, depending upon your case. Make sure that your schedule contains everything and anything, and then it's kind of a procedure that it takes about 4 to 5 months or so, and basically it should be very smooth going. If your co-heir along with you or whoever the stakeholders are, file a consent affidavit along with you, meaning they consent to your being the executor. And if there is a co-heir along with you who has an equal rights, she or he is going to say, no, even I'll be the executor. That means even I'll be the petitioner in the petition for letters of administration.
Sure.
And letters of administration is the word for intestate succession. And probate is the word for testate succession or testamentary succession.
So some of this has gotten a little complicated, so I'm going to ask you simple questions and hopefully I can understand. And when I understand, my viewer can understand. So first of all, in the case of a physical share certificate, you've said get it dematerialized. You've said go to a bank. Is the bank the only person that can help you to do this, or are there other people that can help you to do this?
Well, I'm sure there are other people also who will be able to help you out. Suppose you are having mutual funds, maybe those companies can help you out in that, saying that, oh, we do this also, by the way, on the side. There is a bank. Usually what happens is that I would want to, if I have got, certain things attached to my bank, apart from my FDs and my savings bank account, then if I've got something else also, which is, your investment portfolio is there with the bank. I don't see any reason why the bank should refuse to do that for you. And they say, okay, why don't you park these shares with us also at the same time?
You can potentially go to your broker. You can potentially, whoever's basically whoever's transacting or helping you transact, right?
Correct.
Is it your opinion? You've probably seen a lot of situations where this is panned out. Is it your opinion that legal help should be sought to ensure a full transfer and a dematerialization and full transfer right from the onset? So suppose hypothetically, Swapnil, I was to find share certificates and I want them to be transferred. And I don't know where to start. We're discussing this today. Is it a good idea right at the onset to seek legal help?
Absolutely, because the legal professional is the person who will know exactly what to do, how to go about it.
Fantastic.
So there is no ways that, you're going to inherit some property. You might as well spend a little bit on lawyers. So, you make sure that everything comes through. And I would strongly recommend, even though the 25 Amendment says that you don't need to do it in the city of Mumbai and a couple of other cities, but I would strongly recommend that in case of intestate succession, where there is no will, I would strongly suggest that you go for a letters of administration. Have that done from a court of law through a professional lawyer. So you are absolutely safe. And then, once that letters of administration comes in your hand and you being the executor or, the person who's in charge of all the assets of your dead parent or parents, go to the bank and every other place that you need to go to get, this account, please do it, transfer it in my
Sure. Okay, so we've said that that's ideal, but let's still discuss the process that you need to follow, Swapnil, right? So you've talked about the share certificates, dematerialize them, and so now when you've dematerialized them, then the process ultimately will become the same as dematerialized shares and mutual fund units, etc., right? When you're talking to the entity that is a custodian of that. So basically the depository is what you will have to speak to.
That's correct.
Right? You will ensure that there is a transfer, and so therefore first you will have to go to a court of law and to ensure that there is a transfer of ownership, and then you will tell the depository, hey, I have this letter of what do we call it? The letter of?
Administration. Letters of administration.
Yeah, you have the letter of administration. So basically the most important document for you to get, if there is a lack of a will, is to get the letter of administration and to provide it to the depository and then ensure that you have the transfer of ownership. This is in the case of financial assets, right? That holds true for banks as well, fixed deposits as well?
Everything, movable, immovable, all of it, even if you're flat. Now we are coming to immovable property.
Yeah.
That also needs to be mentioned in the schedule. Your schedule should contain everything. First thing you begin with is immovable property. Then you talk about movable property like jewelry. Then you talk about these kind of shares, debentures, etc., whatever you have. So your schedule should include everything and anything, and then your grand total should include approximately this. And in the house, you should also specify, when it's case of immovable property, that whether it's self-owned or whether it's rented.
Yeah. Okay.
So all of that needs to, because rented तो सवाल ही नहीं है, but आपने अगर किसी को rent कर दिया है, suppose you've rented to someone, then you should say that the amount of rent that it's fetching.
Okay, no, before we get into the rent, because ultimately from my perspective, property is where there are several issues that can crop up, right? Because in the first place, what if there is a scenario where there is a husband and wife, or rather father and mother, the father passes away, hypothetically, the mother and father were joint owners of that flat, okay? So, and there is no will. There were 2 children. So there is now mother and 2 children. With the lack of a will, what is then, from the legal perspective, the ownership of that flat?
Right. Now, suppose if the flat was bought together in a joint, it was a joint ownership. 2 names were there in the deed of purchase from the builder or say from another flat owner.
Yeah.
Say if I bought it from Alex and me and my wife have bought it from Alex together and I die without a will, my wife becomes the sole owner if it was joint owner either or survivor basis. So she becomes the sole owner of that flat post my death. And somewhere or the other, I would have given a nomination form to the society saying that in case I die or in case whoever dies, the other becomes the absolute owner. Now, if it was not mentioned clearly in that scenario, whether we both are joint owners or whether it's going to be either or survivor, then it is always safe for your other 2 children to also, come into the picture, and for the mother, that is my wife, to apply for the letters of administration in case I died intestate, that is without making a will, saying that, look, there is this flat and now there are these 2 people and the flat can be given the balance 50% share will be distributed equally between the remaining 2 heirs, that is 25, and I being the 50% shareholder.
Oh,
of that flat.
Okay. So basically, if you think about it in terms of percentage ownership, if it's originally 50 and 50%, then in the case of the remaining 50%, which has to be distributed, it'll be distributed in the form of 50 and 50. It won't be 1/3, 1/3, 1/3, right?
No, not at all.
It's
Because
50.
the wife cannot, because I've made it sure that tomorrow, my wife, in case I die, is not subject to the mercy of the 2 people who will say, oh, we are 1/3. So we are basically 2/3 and you're 1/3. So, we have to call the shots and things as far as, so now please ensure that I'm giving this 2/3 to someone, we are selling it and you may live with that person, whoever that person may be. No.
Sure.
So 50-50, still that 50% will still have some major say.
Okay. So, and this is true for all forms of succession? Or is there a different rule for the Indian Succession Act and for the Hindu Succession Act?
No, intestamentary will apply to Hindu Succession Act for Hindus, Buddhists and Jains.
Yeah.
And the Indian Succession Act applies to Christians, Parsis and Jews in cases of intestate succession.
And
so Indian Succession Act will prevail, but the rule will be more or less the same in the terms of devolution to the people who are your heirs. You can't say that, okay, because it's the Indian Succession Act, and now this person is intestate, that is the Christian has died intestate.
Yeah.
So, the 2 children will get 1/3. Sorry, it doesn't work like that.
Sure. So Swapnil, all of this seems to be a very complicated process, but if you can very quickly tell me, once you have now this intention to go out and say, I want to give the property to one person, everybody else needs to sign off on that. So very quickly, what is the process to follow when it comes to a property? Is there a fee? Is there a court fee? All of that, can you describe?
Yes, when you apply for letters of administration or probate, there is a 75,000 rupees court fee that you pay to the court, which is the maximum court fee. Now, the point is that if you are alive, then it's better if you anticipate some problems after your death. It's better you execute a gift deed to transfer from one person to the other. That is called as an inter vivos transfer. That means whilst you are alive. So it's better to settle all disputes, potential disputes, when you are alive. Because after you die, you don't know what the hell is going to happen. Somebody is going to challenge something. Even your will can be challenged. So the point is that it's better you make a will. And if you want to make a will, that make sure that as far as immovable property is concerned and things which are there, then you do it inter vivos. That is from one person to the other.
Got it. Okay. All right. So
best to do it when you are alive.
Best to do it when you're alive. Yes, that's the key word, and I think the best statement to take from this conversation. Swapnil, thanks so much for taking the time. Pleasure having you. No, usually what happens is that this kind of legal issue is pretty complicated, which is why what he said at the end, Swapnil, is the most important thing. Ensure that you make a will and you're very clear about the assets that you want to transfer, who you want to transfer it to, and if a probate is possible for you to do, ensure that you get the probate done, even if it costs a little bit of money, because this is something that will make your will more foolproof and it cannot be challenged later. Well, if you've got questions about this, then write to us and we'll take them up in subsequent episodes. But this is all we have for you in this edition of Your Money Matters. Thanks so much for watching. Do stay tuned. This is NDTV Profit.
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Nabal Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm NIIT Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Everyone sees a house. I see decisions. Why this location? Why this timing? Why this buyer?
We are now joined by Mr. Ramchandran, who is the Director and Chief Operating Officer of V-Guard, joining us now. Mr. Ramchandran, thank you so much, first of all, sir, for taking out the time. My first question to you is that this quarter was largely driven by electronics as well as the electrical segment. Just want to get a sense that consumer durable was something that lagged on account of weak demand. According to you, how is FY27 now shaping up in terms of segment? How do you expect the shift to be like in terms of the mix?
Good morning. And coming to the specific questions that you've been focusing on, fundamentally, the impact of weak summer has been felt primarily in the electronic segment through the underperformance of stabilizer through last financial year, although Q4 did show strong recovery. As far as the consumer durable segment is concerned, mainly, we are impacted here in fans and air coolers, right, where there has been a significant drag, both for the full year, though some relative recovery has been observed in Q4. So that's primarily impacted us. The consumer durable segment has underperformed relative to the other two segments. Mainly by the underperformance in these two categories, even though there is a recovery over the same period last year in Q4. Going forward into next financial year, I think it's fundamentally going to be driven by three factors. I think the summer, and how it shapes up. South has responded well thus far. South is 50% of our, nearly 50% of our revenue. And although there have been intermittent showers and, the onset of summer has been interrupted from time to time. However, at an aggregate level, summer has performed well. When it comes to non-South, I think, March and, even April, summer has been muted, particularly in North and East. And starting May, we are starting to see the signs of the impact of summer and recovery in demand arising out of that. I think at an aggregate level, that being said, given that last year's summer was bad, we should be able to do a decent job as far as the current financial year is concerned, even notwithstanding a strong summer. So that's the background on these categories. I think the impact of that on fan and air cooler will continue to, be challenging, till the recovery is fully observed.
Fair. So then, Mr. Ramchandran, your guidance with regards to a 15% growth in FY27, where around 10 to 12% will come from volume growth, is still sustainable, considering that consumer durable margins are still weak. How is the margin guidance that you have internally kind of penciled in for FY27?
So I think the volume growth we are expecting to sustain into next financial year. I think as far as the value growth is concerned, 2/3 of the input cost increase has already been transmitted into market. I think almost 70% transmission has happened by end of April, and the remaining price transmission should happen in the rest of the year. I think the underperformance, in terms of margin, has been more, in respect of EBITDA rather than in respect of gross margin, because gross margins have held out even last year. Because of weak revenues in some of the summer categories, the EBITDA performance has been impacted as there has been a shortfall in throughput.
Okay. The other aspect, Mr. Ramchandran, it's, that you were just mentioning, right, with regards to the commodity inflation. How do you, because it still remains elevated anywhere between 8 to 13%, right? And if I'm not wrong, up till now, only 75% price hikes have been kind of forwarded to the consumers. Going forward, what is the kind of price hikes that you're penciling in order to protect your margins?
No, I think we will obviously, attempt to transmit input cost increase and protect our margins. We have the benefit of carrying inventory, both finished goods and raw material, as we entered the post-war scenario. And this is, this benefit will progressively, fade out. And I think, that gives us some room in terms of time to land the increases. We do expect the remainder transmission to happen through May and probably the, first fortnight of June. As, before, we exit the season.
Fair. The other aspect is Sunflame margins have improved quite a bit, right, to 6.7%. Now, the integration is largely complete. Just want to get a sense that as to when these margins will kind of coop up with the margins of the company. I mean, when do you think will that be at par at the company level?
Yeah, I think the integration of Sunflame and V-Guard has been progressive. I think we started with customer service and quality and warehousing and logistics. So these were the areas that we picked up in the first phase, and these areas are now more than 10 to 12 months, or rather maybe 9 to 12 months into the post-integration phase. Here, we are already observing, what I would say as performance parameters and SLAs, comparable to what we are able to achieve in V-Guard, and which is reflecting in, improved service both to trade partners and consumers, and we are able to realize similar performance. Now integration, integration on, sourcing and planning will be complete in another month or two, which should complete the operational integration. Sales integration commenced somewhere around October, November last year, and as also the product development value chain. The impact of this, we believe, we should be able, the sales integration impact, we should start to see in a quarter's time, mainly by way of, expanding the Sunflame trade partner network, and also activating the V-Guard sellout management capability, which should help to extract more out of existing partners. The NPD rollouts have started. I think, we've had, we've been able to refresh, part of our portfolio towards Q4 and Q1 of this year, but that may still be about 20 to 30% of our portfolio. We expect over the next 6 to 9 months to refresh the complete Sunflame portfolio, and we should see the benefit of this refresh coming towards the tail end of this year and also the next financial year. So I think we look forward to having
stronger, what I would say, impact, building up progressively as we travel through this year. As far as Sunflame margins are concerned, I think Sunflame gross margins have always held out and continue to hold out. I think as the Sunflame growth starts to kick in on the back of expanded network, strengthening of the sellout capability, and refreshing the product portfolio, I think we should start to see the revenue growth translating into EBITDA improvement.
Right, Mr. Ramchandran, thank you so much for taking out the time and giving us those insights on how FY26 fared, and of course what lies ahead of FY27, and of course for taking out the time and speaking with us at NDTV Profit.
We have Srinivas Mattapalli joining in. He is the Group Chief Financial Officer at Agility. Srinivas, thanks so much for joining in. It's Puneet this side. Just to start us off, very quickly on what we've seen, that it's been a very strong year for you overall. You had that big acquisition also that's propelled the growth numbers. But barring that, a 15% constant currency growth for FY26 isn't bad at a time where we've seen the volatility. What gives you the confidence of a low to mid mid-teen growth guidance that you've given for FY27. Is that some kind of order book number that you can give us that shows you the resilience, at least in this volatile time, to continue that kind of growth?
No, we are particularly proud of how we have performed in this year. 15% organic and overall 29% including inorganic, I think was a particularly good year. Our order books continues to be strong. Our underlying, propellers for revenue, I think continues to be strong. We have been given a guidance for low to mid, low mid digits growth for the current, FY27. And as I said, all the growth propellers, whether it's outsourcing demand in the health care industry, the requirement for payer cost optimization, all of that remain intact. And I think delivering to this, given our order book of about 570 million, not order book, sorry, our pipeline of about 570 million, I think gives us confidence to be able to deliver to those numbers.
Also, Srinivas, what we've seen, and since you are such healthcare focused, in the US, what has been the current conversations on the ground? Because we spoke post Q3 as well, and just a certain couple of issues that you had highlighted at that time, you had expected them to get solved by Q4. As of now, do you feel that the buoyancy still continues to be there? And with AI, you mentioned that the impact is about 2%. It's slightly higher than what you'd guided earlier of 1 to 1.5%. So how should we look at the AI aspect for Sagility at this point of time? When you quantify that 2% impact, is it that you have to deliver those AI services now and you're not able to charge the client for those services, given that it's a base need for those clients right now, and maybe it's a big opportunity in the future, but right now you see that impact?
No, I think first of all, I need to say that AI for us continues to be an enabler rather than a threat. So I think embedding AI in our operations, helping us drive more effectiveness or efficiency from a customer perspective, I think continues to be the way we look at it. The 1.5 to 2% is what we potentially feel is an impact on revenues. But as I said again, the overall outsourcing, potential and the requirement for cost optimization for the payers continues to be very strong. And as I said, that 1.5 to 2% is factored in our growth guidance of low mid digits.
Srinivas, because what we've seen this year as a whole, and just taking a step back, is that your clients more than 20 million has increased by from 7 to 9 odd. You've also seen some increase in the 5 to 20 bracket as well. What are those additions largely clients which were in the lower bracket which have now been upgraded and you're more catering to them, or is these new client acquisitions and you expect them to continue in the next year as well?
We continue to focus on adding new clients, especially from the mid-market segment. And I think our acquisition in BroadPath has helped us increase the overall numbers to about 82 now. We serve about 81, 82 clients overall. So these are all new additions. We have added about 17 clients in the current year. The net client growth is about 10. So yes, we do continue to add clients. And, any new client that comes in obviously comes in with a smaller number, and we continue to expose them to our capabilities and grow them over the life cycle. So that's the way we penetrate new clients.
Just one last question, Srinivas, because of paucity of time, we've seen that you're generating a lot of cash as well, and that a certain amount has gone into their acquisition, as you spoke about for this year. But for the next year, you've been able to generate that 1,000 crore odd cash in FY25.